Good morning and good afternoon, everyone, and good evening also some of you. I asked first Dr. Happ of Professor Hobert, all your claimant side persons are in the hearing room.
Yes, Mr. Chairman.
Thank you. Dr. Conrad for the respondent. Everybody in?
Confirmed.
Okay, thank you. Then is there any question of procedure or an administrative nature you would like to raise, Professor Hobert?
Not from the claimant side, except to say that we have no comments with respect to the transparency issue. The video.
Mr. President, can you wait? I don't see the other two arbiters. Okay, here they are.
No, they are. Dr. Conrad, on reflection, anything on the tapes, if I may go that way?
No, as we said, we want the highest degree of transparency possible.
Okay, but I give you an overnight reflection time. All right, then we can, the tapes can be posted, Gara, by Exit.
Yes, we will proceed to post the versions now.
Okay. Dr. Conrad, also from your side, nothing further from a procedural administrative matter?
Just on the posting of the videos, I note that today is a Sunday, so the members of parliament who would like to see them probably may not be seeing them today. I wonder if, because of the Sunday issue, claimants would agree to an extension of 1 day for the opening day, for the videos to stay online longer.
I think the whole thing is 1 week after Friday. That was my understanding of the ruling.
Excellent, thank you.
Okay, all right. So yeah. All right. So then, Mr. Kaczmarek, good afternoon to you. Can you hear me?
I can hear you fine, thank you, Mr. President.
Okay, Mr. Kaczmarek, could you please state your full name for the record?
Brent Charles Kaczmarek.
Mr. Kaczmarek, you appear as an expert witness for the claimants. If any questions are unclear to you, either because of language or for any other reason, please do seek clarification, because if you don't do so, the tribunal assumes that you've understood the question and that your answer responds to the question.
Understood.
Now, Mr. Kaczmarek, as I told you on the previous occasion, testifying before a court or an arbitral tribunal is a very serious matter. And that connection, the tribunal requests you to give the declaration, the text of which will now appear on the screen.
I solemnly declare upon my honor and conscience that my statement will be in accordance with my sincere belief.
Okay, then, in addition, since we are in a virtual hearing, Mr. Kaczmarek, could you please give the following oral affirmation? Do you affirm that there is no one else in the room with you except those authorized, and no authorized person can communicate with you?
I affirm that.
And could you give a camera scan of your room? Is that possible?
Yeah. I can't see what's happening, but you'll have to. Were you able to see?
Yep. Dr. Conrad, is that to your satisfaction?
Can we get a confirmation for from claimants that they don't believe that the guest room's bed is confidential information that they will request to have stricken from the videos?
Well, noted.
Shortest commute ever.
Good. All right. So, and then, Mr. Kaczmarek, simply to confirm, what do you have on your desk?
Yes, I have a blank notepad. I have a copy of my slides for this morning, and I have a printed copy of the 2 reports in this QA proceeding. Coffee and water,
Okay, thank you.
as well as one other laptop that has the file repository of all the reports that I've issued in the proceeding.
Thank you, Mr. Kaczmarek. Then could you please go to your report of 15 March 2019?
Yes.
And go to the signature page. Page 14. And confirm for the record that's your signature.
That is my signature.
We then go to your further report of 22nd January 2020. And go there to the signature page. Page 118, 138, excuse me. No, 118. 118. Sure. It's
Yes, that's my signature.
Is there any correction, amendment, modification you wish to make to either report, Mr. Kaczmarek?
Neither. No.
I understand for direct you will give your presentation for 30 minutes, which we have received in PDF format. Please proceed.
Perfect. Well, good morning on my side. We could turn to slide 2. I'm going to walk you through 5 sections of the presentation this morning, starting with a summary of our March 2011 calculations, the original calculations. You'll have seen probably from the Q8 reply, we chose to give you a summary rather than respond in detail to the numerous issues respondent had raised. Because many of the issues that they raise are mischaracterizations of what we have done, and or they don't engage with explanations that we have provided. So we thought the best thing to do would be to start again with what we did originally in this case, and it's relevant in any event to the question 8, which is how the damages would change if we move the date. So let's turn to slide 3. This is just a summary again of the claim breaches by claimant. I won't get into the details of it. They've spoken to you about it enough, I'm sure. Only other than to mention regarding number 2, rendering the OEPVs without value. One of the critical elements of that I will discuss today will be in respect of the hard shutdown dates. Slide 4. So here, I wanted to just briefly touch upon the 2 elements of the ECT that were particularly relevant for us in terms of our quantification approach. And you'll see Article 10.1, the bolded statement, no contracting party shall in any way impair by unreasonable or discriminatory measures their management, maintenance, use, enjoyment, or disposal of investments. And I've highlighted or underlined the word impair there. And then Article 13, as you all know well, for expropriation, compensation shall amount to fair market value. So those are 2 of the critical elements that have always been guiding our analysis for the past 7 or 8 years. Slide 5. So how did we approach this task? We approached this task as looking at an impairment to the fair market value of claimants' investments. As of 14 March 2011. We have a but-for value, which is immediately before the measures became expected, and absent the NFT, which is a claimed breach, less an actual fair market value, which assumes the breaches as they came to be. So it's those 2 differences that are the impairment. And then, of course, we have some adjustments after that for interest, taxes, and offsets. Slide 6, just briefly touching on fair market value. You've all probably seen the definition many times. The problem often, though, is on implementation of the standard. And I'll talk about that today. Because I think that's really the difference between the parties. And 2 points for this slide I wanted to emphasize. Fair market value, like fair value, which I talked about as well in my reply report, is a reporting basis of value. And what does that mean? So fair market value reporting, for example, on your tax returns, or fair value in your financial statements. These have rules and guidelines as to their implementation. And that's important because if you think about financial statements, investors want to see consistency in the application of how you're doing evaluation, so they feel comfortable understanding changes from year to year and even from company to company. So we'll be talking a lot about some of the rules and guidelines this morning. The second point is at the bottom, you'll see from Ms. Hardin's third report, she's obviously acknowledging for this QA proceeding, she's also employing fair market value. So the ECT refers to fair market value. We're using fair market value as our respondents. I think everybody's implementing the same impairment framework. We just reach very different conclusions as to that impairment. Slide 7. So this is the nuclear fuel tax. This is a change we made after the original hearing. I'll move to the second bullet. You'll know it was declared void ex tunc by the Constitutional Court in Germany. So the appropriate treatment here is to revise upward the actual value of claimants' investments. And in this case, it's just Brookdorf that was affected by the NFT. And you adjust the actual upwards because this is a form of a remedy. Some of the impairment has been fixed. But that's not the way we approached it in our NFT report, which is what I'm describing here in the quote. We approached it by reducing the but-for value of Brookdorf. And we only did that because we had a switch in the model. And it was very easy to just toggle the switch. And because if you increase the actual value or decrease the but-for value, you get the same mathematical result. So it didn't matter. At the time, we thought this is an easy change. Let's go with the easier change and give you the figure without resorting to changing models and a lengthier submission. Slide 8. So obviously one of the big issues in this case is the fair market value of the OEPVs in the actual scenario. You've heard us say that there was a monopsony market for these, one buyer, E.ON or now Pell. And we said from the very beginning that E.ON had no incentive to acquire any of these volumes given the market uncertainties. And because they were unwilling to transact, and they're the only buyer, since they're the only buyer, they could be the only hypothetical buyer. If they're unwilling to transact, we said, you can't do a fair market value calculation, so 0. Slide 9. So the other important point.
Mr. Kaczmarek, may I ask you to go back for 1 second to slide 7?
Yes. I forgot to mention, please do interrupt. It's often, as you know, easier to do so as I move.
Okay, thank you.
So,
regarding the last bullet point, assuming without admitting that this tribunal would say the NEPVs are not to be considered, would that mean that Brookdorf can be left aside in its entirety in terms of damage?
one of the slides I'll come to will show you that basically the claim for Brookdorf, as it stands now, relates only to the NEPVs. So nothing now is affected by the NFT. So if you ruled it wasn't a breach, doesn't matter. Wouldn't affect any calculations.
So that for all practical purposes, the tribunal would be able then, assuming that would be the case, leave aside Brookdorf.
Well, Brookdorf still has a claim for loss of NEPVs.
Yeah, but assuming without admitting that this tribunal would come to the conclusion that NEPVs are not to be compensated.
I may have misunderstood you. If you determine that, then the damages for Brookdorf would be 0.
Thank you.
And I'll show you that in a slide.
I understand. Okay.
So we're back to slide 9. So importantly, when we're thinking of fair market value, the parties, the hypothetical buyer-seller, should be considered rationally motivated. And E.ON was rationally exercising its right to not purchase the OEPVs. And you saw that in a letter which claimant sent in 2012, seeking to engage E.ON, and they said, thanks, but no thanks. We'll come back to you at a later date when needs arise. So that was a rational and not an irrational response from E.ON. Slide 10. So just summing up again, fair market value, we're simulating a hypothetical transaction on the valuation date to get a value of the investments. There was only one buyer in the market for the OEPVs. It was E.ON at either date that we consider. E.ON was uninterested in purchasing OEPVs as the only buyer, and that was rational because they could always wait and buy them later. They weren't going anywhere. So there's no hypothetical transaction that can be analyzed in this context on the valuation date. And if there's no transaction that can be analyzed, there's no fair market value. So it's really as simple as that. It's a fairly unique situation in that your potential or relevant buyer pool is one buyer, but that is the case here, and I don't think that that's substantially disputed. So slide 11. Fair market value of the OEPVs in the but-for scenario. Now here we told you back in the first report of this case that the scenario in the but-for world was markedly different. There would have been 8 more operating NPPs. And here I come to no hard shutdown dates. That's critical because without hard shutdown dates, which existed before the measures, the NPPs in Germany could freely trade with some restrictions about transferring volumes to younger plants, but they could move volumes around. And the idea was to exhaust all the volumes and not leave any of them stranded. And the demand would have exceeded supply at that time. So there were more buyers in the market. There was no risk of purchasing OEPVs and not being able to utilize them or sell them. And so we believe in the but-for world, despite the fact that, as you see in the table in the middle of the slide, we identified 4 plants who would only have a need for volumes starting in 2020, some 9 years after the valuation date. Despite that, as you see at the bottom of the slide, we said we could determine the price of these volumes and what they would be sold at the valuation date. A very different context in terms of analyzing a hypothetical transaction. So slide 12, this is just a summary of our original calculation with NAPVs and interest to 22 January 2020. You've seen we've since issued some offsets, so that continues. Slide 13, this is the same figures without the NEPVs. And Mr. President, if you look in the middle for Brookdorf, you see 0. So that's, if you reject the NEPVs, there's no claim for or damages for Brookdorf. So slide 14, I'll turn to our answers to Q8. Slide 15. So you may have seen respondent critiqued our submission on answering Q8, saying it was too short. But of course, it's, as you might expect, valuation professionals, if they're routinely following a company in the market, for example, like investment bankers, they're moving quarter to quarter and they're updating their previous models. No one starts with a brand new model every quarter de novo. And so for us, all we had to do was effectively move a quarter and determine how we would update that model to reflect the situation at 29 June 2011. So for us, the length of the report matched the type of analysis that we needed to do. Slide 16. So first thing we did is we looked at external market factors. How did things change between March and June 2011? And you'll see we've looked at now 4 total companies, and this is the share values of these companies. And I've scaled them all to 1 so that you can see the changes of each relative to the other. And you can see there was nothing significant going on. In fact, maybe a little uplift, particularly with CEZ, Ches. So this was our first indication that things were stable, if not positive, for nuclear power-related companies between the 2 valuation dates. Slide 17. So this is a summary of certain market data inputs and company-specific data inputs. The first column is the input parameter for our original valuation. And then the next 2 columns are the 2 options we've given you in answer to Q8, with the middle column being claimant's preferred approach. And that is to keep the March 2011 market data that we originally used, rather than use June data. One would normally use June data, but as we've expressed from the very beginning, the expectation of the measures caused by the moratorium likely influenced the electricity market. And there were, of course, further influences other than the measures. And one had to disentangle that. And I'll talk a little bit more about that. But that has been our primary concern, and you'll see electricity prices did go up. I'll show you that later. But if they go up, what effect is the expectation of the measures by removing 8 plants from the system? and what is other factors? That has been the difficult question for us all along, because claimants don't want to complain about the measures and yet indirectly benefit from some element of them through a higher electricity price. So claimants' preferred approach using market data from March, because again, we went back to March to before any of the measures. That was our solution to untangle the problem that exists throughout the moratorium period. So this is the summary of the numbers with NEPVs.
When you say you go back to March, this is going back to March 14th.
This is going back to March, well, March 14th data, March 10th for electricity prices.
Right.
But using that data, particularly the electricity price data, again, because we're trying to disentangle, it'll be a little bit more clear as I get to another slide, how much electricity prices increased due to these possible effects on the electricity market of removing 8 baseload plants versus just other factors affecting the electricity price. So our solution has always been, rather than try to untangle it, let's move the date back and not have to deal with the untanglement. And so that's why the preferred approach is still using that March data even as of June, so that we don't have to get into the messiness of saying what percentage of the price increase relates to the measures, what percentage of the price increase relates to something else.
So if just one question, and then I'll wait for your explanation. On slide 16, the previous slide, go back to that. If the start date had not been the 14th of March, but say the 1st of March, where would the lines have gone before the zero?
Brilliant question. We'll get there on slide 34.
Perfect, thank you.
So back to slide 18, I think we're on. Yeah, so this is our summary. I'm going to do that. Of answer to Q8, the preferred approach by claimants of using the March market data. As you'll see from the previous slide, the company specific data we saw nothing that needed to change. So all we really had to do was move the date forward. We recalculated the discount rate. And so now we're discounting a little less and we're getting a little less interest moving forward. And that's just a minor mechanical adjustment, which yields a difference of only less than 1%. Slide 19, again, that's without the NEPVs. And that number changed again within 1% as well. So slide 20, now turning to using the June data. And you see on the left, we have the market futures curves as of March 2011 and as of June 2011, March 10th and June 29. And you can see how electricity prices rose. That's the orange line. And so this has been from the very beginning our problem of this is about a 7% increase in prices. And we needed to know how much of that relates to, if any, the anticipation of possibly 8 plants coming offline, and how much relates to external factors. So again, our solution was, let's just go back to March and not deal with the disentanglement, which we think is a very messy and difficult process. But nonetheless, the prices are higher. As base load plants, all of that price increase falls to the bottom line. Likewise, uranium price curves, futures curves, you see the orange line dropped. Again, that's beneficial to a nuclear power plant as a source of fuel. That is also a benefit, but not as much as the electricity price increase. So those were the two major external market factors that changed. Slide 21. So this is the updated data as of June 29, 2011, using data all the way up to June 29, without trying to untangle how much the measures might have impacted electricity prices, because that would be something we would want to take out. And then on slide 22, you see the scenario without any PVs. So turning to slide 23, and I'm going to briefly walk through respondents' what I call illogical answers to Q8, slide 24. So this is a presentation we made in the Q8 reply of Ms. Hardin's data. This is not how she presents it. She always presents a change in the overall damages figure for her disagreements. But we thought let's rearrange it and look at it by plant and by impairment, and see if we can glean something. It's always good to step back and look at your model, particularly in cases where you have very complex models. So you're trying to make sense of what's going on. And the first thing you see is that Krumel is worse off by 1.3 billion euros. That is, they're better off with the measures in place than without, according to respondents. The measures were a favor for Krumel. It basically, as we say, saved claimants from making the mistake of restarting Krumel to the tune of 1.3 billion euros. For Brookdorf and Brunsbüttel, you see there is an impairment, and that totals around 83 million euros. But overall, respondent concludes the measures were very good for claimants, to the tune of 631 million euros. Enhance their investments, if you will. Now that's the OEPV only scenario for Ms. Hardin. On slide 25, we have the OEPV plus NEPV scenario. So our observations on that, the first thing we noticed was all the actual values for the plants changed. That doesn't make sense. The actual value should stay the actual values. So clearly there's some problems in the modeling, and you may have seen from our reply, we found a lot of problems in the modeling. Not disagreements on conceptual issues, but just mechanical Microsoft Excel issues that were not correct. But you'll see now the situation for Krumel is even worse. They'd be worse off with NEPVs, now to the tune of 1.5 billion euros. The impairment has gone up for Brookdorf and Brunsbüttel to a total of 146 million, but still claimants better off to the tune of 679 million euros. The measures were a favor. Slide 26. So I mentioned how Krumel being even worse off in the NEPV scenario, 55 million. Same would be for Brookdorf. If you look at the previous slides and do the calculation, 64 million. So in effect, Ms. Hardin's calculations are saying the German nuclear power industry's negotiations to achieve these lifetime extensions were irrational. These would be unprofitable extensions that they shouldn't even attempt to undertake. They should have shut down the plants when apparently when the OEPVs expire and not use the NEPVs. So these three analyses, I think, just kind of underscore what sometimes happens in complex modeling. You forget to stand back and just look at the numbers and see if you can make sense of them. Slide 27. I'll quickly touch on the two main areas of disagreement. Slide 28. So this is the format of how Ms. Harden has presented all of her disagreements with our calculations. You'll see at the top, there are several legal issues. I won't dive into any of those other than to mention that she's still applying the NFT to Krumel despite the Constitutional Court ruling. But I want to touch on the electricity prices and actual value of the OEPVs. Those are the two fair market value issues of greatest importance. You can see 2.6 billion euros for the pricing and 1.8 billion for the OEPVs. So let's start with the OEPVs.
Ms. Marek, you have 5 minutes left.
Thank you. So fair market value, as I've mentioned, it's a transaction on the valuation date. Ms. Harden has acknowledged that she assumes no MPP will buy available volumes prior to the year they could utilize them. We agree with that. That creates the issue of not being able to do a fair market value analysis of the OEPVs. So we've called her calculation mechanical and meaningless. She's not modeling an actual transaction on the valuation date. Slide 30, just to sum up again, the situation in the actual scenario. Excess supply, one buyer, two sellers, that's a monopsony. E.ON rationally doesn't want to buy, doesn't need to buy until it has a need. So for Krumel, Krumel's left with volumes that have zero intrinsic value. They can't utilize them and can't sell them until we estimated beginning in 2019. And then with Brunsbüttel, while they could have sold them in the but-for scenario, given the different market dynamic, they likely won't, in our view, ever sell them. But of course, if they do sell any, we would issue an offset on that. So second issue on electricity pricing. Here's one of the problems with respondents' approach to fair market value. They say a willing buyer would be difficult to identify. It's just not an exercise necessary in fair market value. You assume a willing buyer is present and able and has the money to carry out the transaction. The only issue is to determine the price, okay? And of course, now we're talking about MPPs, valuing MPPs, not OEPVs. The relevant buyer pool for MPPs is much broader. So we don't have that strange market situation as to OEPVs. Slide 32, fair market value issues still, electricity pricing. We've benchmarked Dr. Cohen's low case because he's hinged this whole inability to find a willing buyer into using a low case. And you can see, as we've benchmarked it, it's the lowest price forecast. And it's very significant. If he had used a central case, as we show at the bottom, the values would be positive. But by going to a low price scenario, both Krumel and Brookdorf are negative. Slide 33. The issue here is, you'll see Dr. Cohen talks in his reports consistently about a buyer wanting to mitigate risks. The The problem with mitigating risks for the buyer is then they get free returns. He's essentially asking the seller to provide insurance in the transaction. And this is just an irrational transaction model. The seller is not going to rationally give a lower price and insurance to the buyer and allow them greater upside. In a rational transaction, you buy the risk and you get the returns. And so this is just another element of violating fair market value because it favors the buyer, and naturally the seller under such a circumstance would rather keep the investment than sell it, mitigating these risks. Just have two more slides. This is the slide, Professor Lowe, you were referring to. So here we go back to pre-Fukushima. Was this an issue that necessitated low prices? We would say no. You see the three of the nuclear related companies' shares did not change much at all. Some increased, stayed relatively stable. We only have EDF, which fell, and then stayed stable after that. That's due to some gas tariffs we showed you, but that was only a 12% decline, but nothing catastrophic like respondents seem to posit related to Fukushima. The market, in terms of publicly traded nuclear power-related companies, did not take a nosedive. It pretty much continued on as usual with lots of trades in the market. And analysts, as I show at the bottom, continue to recommend nuclear power-related companies.
Just before you move on, and slide 34 shows movements in electricity prices, yeah?
Sorry, these are the shares of the companies again.
Okay, right. That's
all indexed so that you can see the changes relative to each other.
Right. Thanks.
So yeah, I think the important focus of your question is at the beginning of the graph, right? But it's important to look at the end because, you know, sometimes markets can have a knee-jerk reaction and then kind of come to their senses. And I think it's very relevant to see that these companies all were very stable, or in the situation of Ches, you know, rose up to 20% following Fukushima. So we don't think Fukushima is as nearly as big of an issue as respondents do. So last section, and you can quickly turn to slide 36. This is a summary of Ms. Hardin's new 12 adjustments. They've changed a bit. I'm not going to talk about them because I understand I'm limited to discussion of our reports, but I just highlighted in red, there's a lot of new arguments, and we haven't yet been able to address them. And that ends the presentation. Thank you.
Thank you, Mr. Kaczmarek. Any questions from my colleagues? Mr. Bauer? No? Professor Lowe?
I'll wait.
Wait also. Okay. Thank you. Then Dr. Conrad, please proceed with the cross-examination.
Excellent. As a matter of housekeeping, to the extent that we're referring to the Excel model, Dr. Pika will be putting it on the screen in order to avoid delays with FDI. For other documents, we've tried to provide a roadmap for FDI, which document to find where, so I hope it will be faster than yesterday. Mr. Kaczmarek, you will remember that in 2016, I asked you about an updated CV that you hadn't provided with your second report. I also note that there is no new CV attached either to your third or fourth report. And indeed, I couldn't find one on the internet. Is there anything more you would like to disclose to the tribunal?
Nothing other than I've probably now been involved in close to 130 investment arbitrations like this.
So 30 since the 2016 hearing when you testified it was above 100?
Yeah, so I think it's probably closer to 130 now, yes.
And did you now have a chance to look at the ICC rules on the taking of evidence in international arbitration? Or they're still unknown to you?
I have looked at them in the past, but I did not look at them in preparation for this hearing, no.
They're called the IBA rules. I misspoke. It's the not the ICC rules. And there's really nothing extra you want to disclose?
You have to be more specific with your
I'm
question.
asking you because we were looking on the internet and we have discovered that since you changed position, you were getting even more cagey with information.
Again, you'll have to expand. I don't know what you mean.
Is your new tactic of not providing experience available on the internet intentional or not?
Thank you for clarifying. No, it's not intentional. I haven't put any sort of documents on my website. I didn't get around to even creating a website for, 14 months after I left Navigant Consulting. So I had a very simple website design to facilitate people finding me.
This is a TJ from FTI. It looks like Miss Conrad has dropped off. Oh, there she is.
I have no idea what happened because nothing changed other than I couldn't be heard or seen and I couldn't see anything. So other than thank you for clarifying, for the rest I was absent. But I can see in the transcript what Mr. Kaczmarek said. Okay. You still use the word we this morning. And given that you now have moved to your own firm, who is we?
Yes, it's always been a convention of mine to use we, reflecting colleagues that have assisted me, and two of the colleagues who have been assisting me since the beginning of this proceeding still do today.
Where are they?
Physically or in terms of their business?
In terms of their business?
They are at a firm called Versant Partners.
So not at Navigant and not at your firm?
No one could be at Navigant, unfortunately, because it was sold in two pieces to different companies, so it doesn't exist. So they had, before the transactions, formed a company. And then when the second transaction occurred with regard to Navigant, I decided to leave and form my own.
But you didn't join them?
I didn't join them, particularly because I'm trying to slow down the number of cases I take, and wanted to be a little bit more nimble, and decide to take some time off when I want to take some time off. But we still work together quite frequently.
Okay, now let's start for Ernest. Mr. Kaczmarek, you claim you have performed an ex ante evaluation from the beginning of this arbitration. Is that correct?
The analysis is done from an ex ante perspective using the fair market value framework.
And in your most recent offset calculations, they're also implemented in your ex ante valuation.
Correct.
And you would agree with me that for an ex ante valuation, you need to use ex ante data.
Yes, that's correct.
And only ex ante data.
Well, as I've tried to explain, I think several times, many times in this case, there can be no fair market value calculation of the actual OEPVs. So we used all the ex ante data and concluded the value is 0, but recognized the possibility of future sales. So those future sales don't enter into my ex ante analysis.
Good, let's look at your model. And that is the Q8 model, which Mr. Pika will pull up. FDI, can you enable sharing?
Sharing is enabled.
Can you confirm that that's your 29 June 2011 valuation with the March input data? Mr. Kaczmarek, looking at the screen.
Yeah, I'll just I'll take your word for it based on the title of the file. That would appear to be correct.
And we go to the appendix F.7 of this sheet. And just to confirm, this model contains the latest projection of the utilization rate that you use for modeling the OEPV demand in the but-for scenario. Is that correct?
I believe that is correct. Yes.
So we'll start with these but-for modelings. And for the record, and the title appears now in the box with the formula. It's entitled Historic Utilization Rates.
Correct.
Okay. And those you use for projecting the sales of the Brunsbüttel OEPV in your but-for scenario, don't you?
We do use historical utilizations of the plants in the German market to determine when they would actually have a need to utilize more volumes.
And for Brockdorf's value in the but-for scenario, correct?
Correct. We use a 10-year average of their historical utilization.
Okay. I asked Dr. Pika now to navigate to cell G42. That's Brockdorf. And if he scrolls down to 42, that's the historical average, or that shows at 89%. Is that correct?
That's correct.
And I now ask Dr. Pika to highlight the formula at the beginning. So it takes the average of the years G10 to G41. And if we go to cell on line 41, you see that's the year 2010. You see it?
Yes.
And if we go up to line 10, you see that that's the year 1979. Obviously, the data only start in 1987, and we've checked that the absence of data doesn't impact on your average, correct?
If you've checked that and you say it doesn't impact it, I'll take your word for it.
I would hope that you checked it because it's your model, Mr. Kaczmarek.
Well, we tried to get a view, as you can see here, of the historical utilization rates for the plants. To the extent any weren't available, so be it, but we were using the 10-year average for Brookdorf up to the valuation date. So, the 2000s, if you will.
Mr. Kaczmarek, I'm in your but for. And if you look at the formula, and I show it, I'm happy to show it again. 41 is the year 2000. And if you go up, what is included in the year line 10 is 1979. And you have data from 1987. So you're calculating in Excel an average of 1987 to 2010.
Yeah, okay.
I beg to differ, that's more than 10 years.
Yeah, I'm with you, yes.
Okay.
Yes.
And that's only ex ante data here.
It's historical data. Yeah.
Again, ex ante data meaning available as of your chosen valuation date of March 2011.
Correct.
Okay, let's look at another example. So far, so good. Let's look at Krümmel. And that is in column C. Max, can you go up to so we can confirm it's really Krümmel? So that's C is the Krümmel column. And now we go to line 42. And here we see that you calculated an average of 77. You see that?
Yes.
And now let's look at the formula you used. That goes from line 10 to line 37. So it ends with the year 2006. Is that correct?
Yes.
Let's scroll up. 26. So you see that there are years 27, 28, 29, 2010. All years before the measures that you excluded from your average. Is that correct?
Yes, that was when Krümmel went down and wasn't operating starting in 2007. So it doesn't reflect what we would see as the long-term trend of the plant potentially operating at once it restarts.
But you did include years like 1994, where Krümmel had only 22.5% utilization.
Yes.
So, and wouldn't you agree with me that apparently years with suboptimal utilization were characteristic of the Krümmel plant?
Yes, I think we were just attempting to remove the utilization, obviously, when it went down due to the fire that was most recent, leading up to the valuation date.
So, just to be clear, the lower utilization in 27, 28, 29, 2010 was not due to measures in this arbitration.
No, not at all.
Okay, let's correct for that and do a proper historical average of Krümmel, including all years of operation. And so the tribunal can follow. Dr. Pieker is changing in the formula C37, where currently Mr. Kaczmarek's formula ends, to 41. And let's see what happens. It goes down to 67, doesn't it?
Right, that would reflect 4 years when the plant, or 3.5 when it was out of operation.
And
So
to be
that wouldn't be interesting information to me to look at, to consider utilization on a prospective basis, which is what a valuation would consider.
But it's the same historical average formula that you used for Brokdorf, wasn't it? Now, after we corrected it.
I would disagree. You've corrected it. We're taking account, obviously, of a situation that happened at Krümmel that didn't happen at Brokdorf.
Because Brokdorf had, throughout its lifetime, a better performance than Krümmel?
In terms of utilization, that's correct.
I want to explore these but-for calculations a little further. But let's go to the but-for Krümmel. Now, you didn't use either the 77 or the 67 for your but-for Krümmel, as you've just confirmed. As you said, it wasn't, what do you say, not helpful, not interesting to look at for the future performance. You use 85, don't you?
We use 85 based upon management projections. Yes.
Out of curiosity, you did criticize Ms. Harden heavily on her use of reference production volumes. Do you recall what she used as going forward utilization rate for Krümmel on that basis?
I don't know.
In Laura Harden's appendix 12, updated Adobe page 2, could FTI put that up for a second?
Which document are you looking for?
Ms. Harden, LH appendix 12, updated Adobe page 2, the source for the reference production volumes utilization rate for Krümmel.
So her whole, so it's in her fourth report?
Max, can you help FTI? Mr. Pieker is sharing. FTI, please enable sharing. FTI, please enable sharing. Thank you. Steve, I think you're still unmuted. I can hear you breathe. Thank you. Max, I don't think that's the document. Ah, here it is. Here we go. Sorry. So Laura Harden, appendix 12, updated. It's a little further down, Max. Here. It's a utilization rate of 82.55%. Isn't that correct, Mr. Kaczmarek?
That's what she estimated. For the tribunal's benefit, I think the RPVs were calculated as the 5 highest years, something like that and then percentage added, I think it was 5.5.
Yes, and that resulted in 82.55% for Krümmel.
Yes, but I can't recall, and certainly seeing just the PDF, which cells that pertains to. It clearly doesn't go back. It doesn't look like earlier, but I forget. It may have been 5 years over a certain period of time.
But best years, best of calculations, which I think was the reason why you criticized it, wasn't it?
Well, we criticized it. Actually, I think I recall it was in the 90s, between 1990 and 1999. But we criticized it because it was the 5 best years plus 5.5% that I seem to recall. And that did not seem to be a reasonable way to project future utilization for a plant, taking your top 5 years and then adding 5.5%.
And the result of that, sorry, please go ahead.
Sorry, we thought the utilization rates were too high.
Can you speak into the microphone, please? So those best of years that you criticize, the top 5 that you think are unreasonable, are at 82.55%, correct?
I can't do the math if that's the average, but I'll take your word for it.
And help me, since I'm not a mathematician, 8.255 is about 2.5% lower than 85%, isn't it?
Seems about right, yeah.
Please speak into the microphone.
That seems about right, yes.
So 82.55, which is calculated, in your opinion, on an unreasonable top 5 approach, is lower than the 85 that you have for Krümmel in your but-for.
In respect of Krümmel, yes, it's lower. Our concern wasn't focused on Krümmel per se, but all of the plants and the way the RPVs were applied and the projection of utilization rates for all NPPs using that methodology.
Okay, let's go back to the but-for Excel. So we have your 77 with the reduced historical data, which, if it had been done correctly, would be 67%.
I would disagree with your characterization of it being done correctly. The purpose of excluding years of when it was down was to assess what it likely performed at in the past when it was running, as a better estimate of what it would be like going forward when it restarts operations.
And even with your curtailed average, it was 77 instead of 85, wasn't it?
Yes.
Okay, let's stay on F7. I'm actually starting to enjoy Excel, which is a bad sign. You haven't only played with the formulas for Krümmel. Let's look at Brunsbüttel. Its formula. You see Brunsbüttel is column B. If we go down and look at your average, it's 71% here, isn't it?
Yes.
And in the formula, it says, please calculate from B2 to B23 plus B26 to B32 plus B34 to B37. Do you see that, Mr. Kaczmarek? It's your own formula.
I can see it.
Can you please speak into the microphone?
I can see it, yes.
FTI, can you check whether there's something wrong with this microphone?
There's nothing for us to do. It's his machine. I'm sorry.
Mr. Kaczmarek, can you please speak closer to the microphone?
Yeah, I'm sorry. I haven't had any problems with this before. Is this better?
Do you have a separate microphone?
I do, as a backup.
So what happens is then what you do also when you want to get closer to the screen in order to figure what's the numbers in the cells of Excel, then you may leave your microphone. So keep your microphone in, or even better, put your headphone on. Yeah,
You hear me now?
I can hear you.
Yes, good.
Ronald, please continue.
So let's go up and see where B12 starts. In 1981, is that correct?
Yes.
And you've excluded the years 1977, 1978, 1979, and 1980, didn't you?
From the formula, it looks to be the case, yes.
Good. Let's go back to the formula button, Max. And I believe you start now at B8. And we go all the way down to B41, which is 2010. So we're calculating the average for Brunsbüttel for its entire lifetime. And we arrive at 52%. You had 71 with your formula. If we do a proper historical average of all the years of operation for Brunsbüttel, we arrive at 52%. Is that correct, Mr. Kaczmarek?
Well, certainly you could do a historical average calculation like that. But as you see, there were several years of zero. I don't recall exactly the situation for all of those. The plant may have been taken down purposely to do work on it. So the purpose of our average calculations was to get a sense of what the run rate of the plants would be on a prospective basis. And of course, for Brunsbüttel, none of this data ends up being utilized in our model anyway.
And Brunsbüttel doesn't run in your but-for, does it?
Yes, that's exactly what I just said.
I'm not going to take another excursion here, but we're going to come back to Brunsbüttel later. Now let's go to Biblis A, which is column L, and we go to the summary table. Sorry, the average calculation, which is here given at 67%. And if you now look to the formula, we have L10 to L37, excluding L38. Then we have again L39, then excluding L40, and it has L41 again. Do you see that?
I see that, yes.
So it's again picking and choosing, right?
It's not picking and choosing. It was done obviously very specifically because of certain information we had reviewed about the plant's operation. Again, if a plant is taken offline purposefully to do things to improve it, to do a major revision, then we wanted to exclude it because we are trying to make specific calculations for each plant to determine what would be a historic or a prospective utilization rate.
When did B+A start operation, Mr. Kaczmarek?
I don't recall.
Would you be surprised if it was 1979, meaning line 6 in your model?
I think you said 1979.
Sorry, 1975. I misspoke.
Yes, that would appears to be the first year of operations.
Okay, then let's change the formula to L6 to L41. And from 67, it goes down to 64. Isn't that true?
Yes, it goes down to 64. But again, the purpose of our calculations, no analyst just takes historical averages and says this must be the best estimate going forward. You try to be a little bit more informed as to what was happening because you're trying to be more insightful with this historical data to get a sense as to what you think is the best projection going forward. So that's why you see various different average calculations that we made.
Let's go to B+2. Let's go down to the summary table and look at the formula. And you can see that in this formula, the years in lines 38 and 40 are again missing. Isn't that right?
Not missing, I would say 38 and 40, yeah. Not missing, excluded for a valid purpose.
Purposefully excluded.
Purposefully excluded, yes.
Okay. And let's do it correctly now. It is 67 instead of 70.
Again, I dispute your characterization of correctly. I think I've explained that no analyst just takes simple averages of the past.
Mr. Kaczmarek, I'm just asking you to read with me whether the numbers changed. You've made your characterization clear. And we will now do the exercise again for Neckar-Westheim. That's S, column S. That's the first one after the thick line where you can see in the picture an 80 right now. And you can see that it starts operation in line 7. Let's bear that in mind. And go down to the formula, which has it at 80. and you have already an average of, again, that's not the correct starting date and not the correct end date. And let's now put them in. L6 to L41. S7 to S41. And it changes to 78 from 80. Do you also see that change, Mr. Kaczmarek?
I see the change.
Wonderful. So you have looked at 18 plants. B to V in your table. Is that correct?
Correct.
And we've now looked at 5 for which the historical averages were included year that you, and I quote, purposefully excluded. Is that correct?
Purposefully excluded certain years to obtain an average which would be more reflective of what someone might consider on a prospective basis.
Again, as a question of mathematics, 5 of 18 is a bit less than a third, is it?
Yes, that's correct.
And none of the plants we've just looked at where you didn't do a begin to end average were of the convoy type.
You'll have to explain what you mean by convoy type.
It's one of the types of the nuclear power plants in Germany, which is a modern, or relatively modern, pressurized water reactor, and is the type that Burgdorf is.
I don't know. I don't recall sitting here which ones were pressure water reactors and boiling water reactors.
Well, if you don't, that's easy to look up in the record. We will now move to your actual scenario in your latest model, which is the question 8 model. Oh, I'm sorry. Let's stay on here before because I have a few more questions on which plants are convoys.
Right, Dr. Conrad.
Yes.
I suggest that you end your still post the questions on the convoy type plans, and then we take a break.
Okay, will do.
Please continue.
So I represent to you that ESA 2 is a convoy plant. Let's look up ESA 2. That's number E in the Excel file. And this was not one of the ones having years purposefully excluded in the formula.
Dr. Pika, can you please enlarge the view? Because now it gets very small print in my screen. Thank you.
So ESA 2, that's column J. If you go down, you will see that in the formula, it has no exclusion for years. Do you see that, Mr. Kaczmarek?
I do.
Would it surprise you that ESA 2 is a convoy plant?
No, it wouldn't surprise me.
Let's do the same exercise for Neckar-Westheim 2. Which is the U column. And we go down to the summary table, which is at a 95. And we see that the average is calculated without exclusion of any years. Mr. Kaczmarek, is Neckar-Westheim 2 a convoy plant? Or does it surprise you it is a convoy plant?
Again, I don't recall, although now that I've been able to see the screen a bit better, it does appear that there is an indication as to whether or not each plant is a PWR or BWR at the top.
So let's, as last point, look at Emsland. That's column Q. And we go to its average table, 94%. And that's a Q 10 to 41, so without purposefully excluded years. Is that correct?
That's correct.
And then let's look at last at Brokdorf. That's in the column G. And we go down to the summary table. 89%, and we look at the formula. Again, no purposefully excluded years. Do you see that, Mr. Kaczmarek?
I do.
Good. Thank you. And with that, we do a break. Mr.
Okay.
President, how long do you want the break to be?
I'm in your hands, Dr. Conrad, but I would suggest 15 minutes, as we did, as was stated in the order PO 44. So we go to CT 145. Whilst we have the break, Mr. Kaczmarek, you are under testimony and you know what it means. You are not allowed to discuss this case with anyone.
Could I ask for the favor of 20 minutes, because we would like to work in Mr. Kaczmarek's opening slides?
Right, okay, sure. Then recess until, what is it, 1:50.
1:50, thank you.
Okay, thank you.
Mr. Kaczmarek, are you still online? No, I guess not. Okay. Hey, Steve, are you there?
I'm here.
He has his headset plugged in, but I don't think that the computer has chosen that microphone. It still sounds like he's talking into his condenser mic.
Okay.
So when he comes back on, let's just get him go to that little arrow button next to the mute and have him connect to that headset.
That sounds good.
Good. Thank you.
Herr Schmidt, machen Sie mal bitte das Video aus.
Mr. Kaczmarek, are you by your computer?
Sorry, yes.
Can we just have you tap on that microphone by your on your headset? I just want to see if it's actually up by the microphone. Just tap on it with your finger. Okay, no, the piece that's coming near your mouth, the plastic piece. There's, yeah, right there.
Oh, sorry.
I don't think your microphone is set in Zoom. So if you hit the up arrow on the mute button, you should be able to choose the microphone, the headset under your microphone option.
How about now?
Can you tap on it just to make sure it sounds good? No, I'm not hearing it. What is it set to?
I just set it to headphones UC USB headset because it's plugged
Okay.
into my USB.
David, are you there? Does that sound better for you?
It almost sounds the same. Brent, tap on it again one more time. I'm not hearing the tap. Sometimes it
must be
if you-
another microphone connected.
or maybe it just needs the USB needs to be pulled out and plugged back in to kind of reset it.
Let me try it.
Because you'll notice the difference. It still sounds cavernous.
Also, the under Zoom, there's the headset setting and also the microphone setting.
There, David, I reset it. Is that better?
Tap, tap on your mic. No, still silent.
Huh. And you said there's a microphone setting. Microphone. Oh, hold on.
Nope, not yet. Nope.
Hello, hello, hello.
Aha,
Hello.
you're getting there.
Sounds good, I think. Can you tap
Yeah,
it? There you go. Good.
yeah.
Oh.
I just did a test. That's all I did.
Well, you know what? It worked. We certainly
David,
appreciate it.
David, you're happy now? You can hear?
Yes, I am, because now it's clear.
Okay, good.
Yep. Thank you very much.
Okay. Then Dr. Conrad, you may continue.
Briefly, just a quick reminder to please join the English audio channel if you're speaking English. Thank you.
FTI, could you enable screen sharing for Dr. Pika, please? FTI?
Yes, it's enabled.
Wonderful, thank you. So we will now talk about your actual model, but before I go back to your Q8 model and the actual, I want to show you a slide from my opening, which Dr. Pika is just sharing. And Brokdorf is one of the convoy plants for which you didn't change the historic utilization excluding years. That's right?
That's right.
And I was able to say in the opening that in your actual scenario, you say that the future utilization of Brokdorf was too uncertain to predict a buying of OEPB.
So in the actual scenario, this was to determine precisely when Brookdorf might buy OEPVs. It certainly wouldn't have bought them at the valuation date, But exactly to know which date they would end up buying, we said there was some uncertainty. Yeah.
Instead, you shut down Brokdorf in the actual scenario in 2019.
Well, I didn't shut the plant down. Clearly, we forecasted Brookdorf through the end of its use of OEPVs because we were doing a fair market value of Brookdorf, and you value the plant, what it has in fixed assets, and what it has in OEPVs. So that's all it had, and that's all we could value.
Well, okay. So let's see. You're valuing a flower shop. And since you're all male, a flower shop, flowers are very perishable. They're good maybe for a week and then you need to exchange them. Would you say that a flower shop should be modeled without having any regard that it can buy fresh flowers every week?
Well, I don't think your analogy of a flower shop is correct because, as I said, Brookdorf, valuing Brookdorf on the valuation dates, we know they only had a limited amount of OEPVs. The hypothetical buyer would buy Brookdorf, and then, even as Ms. Harden agrees, a future purchase of OEPVs might occur by Brookdorf. That would be by the new owner of Brookdorf. They would make that decision sometime in 2019 or 2020. So I don't know how we could possibly factor in additional OEPVs Brookdorf didn't own if that's a transaction that would take place later.
And that's the same market that you described as a monopsony market with E.ON having all the buying power?
Correct.
Just to be clear, on the flower shop, does the flower shop have a buying monopsony for tulips or roses?
It's your hypothetical example. If you wanted to have one, it could.
Well, obviously it doesn't, but still you wouldn't value a flower shop at 0 because it has to buy new flowers every week, would you?
Well, we're switching topics now. We're not talking about Brookdorf. Is that right?
We're still talking about Brookdorf, but I wanted to make it a little easier for you to grasp as to that most businesses have relatively short-term inventory and need to buy stock every week, some even every day.
I would agree with that.
Thank you. And you project for E.ON a monopsony market for buying, a buyer's monopoly, right?
Yes, correct. One buyer, two potential sellers.
So, which is not the case with normal businesses that have to buy even every day. So it's more difficult to compete for tulips than in your assumed monopsony to compete for OEPV, right?
I'd say that's generally true.
Good. Max, can we stay on slide 42? But for the but-for, you project a completely devoid of uncertainty production and utilization by Brookdorf. It's so high that it uses up all of its LTE volumes. Isn't that correct?
The utilization for Brookdorf is the same in the but-for and actual scenarios. What you have on the right part of your slide 42 here is obviously it goes to 2032 in the but-for because it has you have it listed at LTE volumes. So it can extend its life with the LTE volumes.
You say it's the same in the but-for and the actual, the utilization of Brookdorf? Just to have that again in the record.
Yes, I don't believe we made any change to the utilization in the but-for actual scenario for Brookdorf.
And we looked at the 89 for Brokdorf in the BUT4 before the break.
Yes, I believe 89% was our projected utilization for Brookdorf.
And you're right. So you would also expect 89 in your actual.
Yes, until we get to the end of the OAPVs.
Okay, let's look at the model. And just for, yeah, so you've confirmed it. Let's go to Appendix I.2. Max, can we show the name of that folder? Okay, it does not have one, but you recognize it as the utilization slide for the actual scenario?
Well, again, it's historical rates. If this is the sheet that feeds into the actual scenario calculations, yeah, it may be possible. Yeah.
It is, and this is where for Brokdorf you would want to see the same 89%. I will show you in a moment, but just want to confirm from what you've just said that we're expecting now to see the figure 89.
I presume so. I mean, you have an operational model in front of you. I don't. So.
Okay, let's go to the summary slide and a summary cell and then show you the formula. First, you'll see the figure and it's 85, not 89. And Mr. Kaczmarek, read the formula that you've used to come to the 85.
Yeah, it goes through 2014.
And when does it start?
You'll have to put the marker back on the cell. Thank you. F41. So 2011. So this would have been utilized, this particular appendix, to project when they might run out of volumes and need to buy additional volumes.
Indeed, that's your actual utilization calculation in your Q8 March data ex ante model, isn't it?
No. For our valuation of Brookdorf, we only took information up to the valuation date, so it would have stopped at 2010. We would have taken the historical average, which was 89%. This particular sheet was utilized to try to determine when plants may have a need for more volumes.
Exactly. It's for the demand of the OEPV from Krümmel. For Brockdorf to buy from Krümmel.
Yes, possibly. Exactly. We were trying to predict when offsets would occur, basically.
You were trying to predict when sales would occur?
When a need would occur, yes. And for the actual scenario, that would be when a sale would occur, correct.
And that's an ex ante model?
It's not an ex ante model. It's a prediction of when the supply of OEPVs in the market, that Brunsbüttel, Krümmel, and I believe EMBW might be utilized in the market by third-party NPPs.
Could you read the name of the Excel file, which is in the green just at the top of your screen?
29 June 2011 valuation date, March market data.
And that's March 2011.
March 2011.
No, when you say March market data, you refer to the March of 2011, the year during which Fukushima occurred?
I don't, you asked me to read the title. I'm confused. If you could repeat
Well,
your
it's your
question.
title. You call it your 29 June 2011 valuation date, March market data Excel sheet. The March you refer to, is that March of 2011?
Yes, correct.
Good. And the cells we've just established, the Brokdorf data is pulled from, is 2011 yearly, 2012, 2013, and 2014. Is that correct?
Yes.
Help me. If you have a March 2011 data model, is 2012 exposed?
If you mean by expose, is it utilized?
Was that data that you would have had on your table sitting in your spare bedroom on 14 March 2011? Would you have had that data in front of you?
No, we wouldn't have had that data in front of us.
For 2013, would you have had that data in 2011?
No.
2014?
No.
And for most part of 2011, that's also correct, that was not available as of 14 March 2011.
No, only historical data obviously would be available.
Yeah. And you were surprised before we went to the cell with the average for Brokdorf, which you used to model future demand for OEPV from Krümmel, that you were not seeing the 89% we had looked at in your BUT4.
If you could repeat that question, I was surprised at what?
We had established, and I had asked you that after we had established that for the BUT4, you had a utilization for Brokdorf of 89%.
Yes, that's correct. 89%.
And before I scrolled down, I asked you which figure I was most likely to see, and you said 89%.
Well, this is 85%, including.
Sorry, 89%.
Right. Well, but obviously, this includes additional data, but that additional data doesn't affect our valuation of Brokdorf as of the valuation date.
It does affect your demand for the Krümmel OEPV, doesn't it?
It affects when Brokdorf might have a need to buy additional OEPV. Correct. But this extra data doesn't affect our valuation in June 2011 of Brokdorf, the plant.
You say additional data, you excluded all of the historical data. That is all of the ex ante data, all the years until and including 2010, didn't you, in that formula?
Please repeat the question.
The formula is only 2011, 2012, 2013, and 2014. Thereby, you excluded all the years from the inception of Brokdorf up to and including the year 2010. Is that correct?
Yeah, that's correct. Yes.
You purposefully excluded it, to use your own language, from before the break.
Correct, because this sheet is serving a different function within our calculation than the prior sheet that we were looking at.
So different plans, different averages, different purposes, different numbers. And here you're using exclusively ex-post information to calculate the demand of Brokdorf for Krümmel OEPV. Is that correct?
I'd have to have the operate the model myself to follow the links, but it's clearly used for a different purpose. The 89% was the utilization rate. We've always applied to value Brookdorf in March 2011 or June 2011. So this formula is serving a different, and this sheet is serving a different purpose within the model.
And using just exposed data 2011 to 2014 pulls down the average from 89% to 85%. Isn't that correct?
It shows, yes, that the 4 years after the valuation date, roughly the utilization is 4% less.
Let's move to the next section. And let's show you slide 35 from the opening. You were there during the opening, Mr. Kaczmarek, weren't you?
I was exactly where I'm sitting.
You remember that slide?
I do remember that slide.
And you recognize table 29 from your first report?
I definitely remember this table, yes.
And we've just, sorry, before we do that, let's pull up your first model and look at the same appendix I2 that I've just taken you through for the 29 June valuation date. But we're doing the exact same exercise now for the first report to show you the formula. Let's go first up, establish it is Brookdorf, column M. And Brookdorf starts operation in 1989. Yep. Let's go down to the cell. The 88% you see there. And the formula is pulled from M9 to M42. Do you see that in the top line?
I see that, and that perfectly explains what I was just telling you. So this was our first report, produced in 2013, and we used data through 2012 to try to figure out when Brookdorf would be buying volumes. This data is not utilized, this 88%, in the valuation of Brookdorf. In the previous example of Appendix I2, that reflected our updates through 2014 when we issued our second report in 2015. Again, updating when we thought Brookdorf might be buying volumes.
And in that first Navigant Appendix C through N native format Excel, you used a formula that was from the inception of operation of Brookdorf to 2012. So it did have some, well, most of historical data and some exposed data for the years 2011 and 2012. Isn't that correct?
It is, I wouldn't characterize it as anything as ex post, because this is not utilized in the valuation of Brookdorf. 2012 is not. It is, this sheet serves, the only function it serves is to figure out when plants might have some additional need for OEPVs.
And that affects the valuation of Krümmel, doesn't it?
No, that does not affect the valuation of a Krümmel. It would possibly help to determine when Krümmel might be able to sell OEPVs in the actual scenario.
Let me rephrase. If you had put a value to the OEPV rather than refused to value them at anything other than 0, this here, the average utilization of Burgdorf, as you calculated it here, would affect the value of the OEPV, wouldn't it?
I'm sorry, Dr. Conrad, if you could repeat that. That was a long question.
You're assessing whether or not and when Burgdorf will buy OEPV, right?
With this sheet, yes.
And if Burgdorf buys OEPV, and sooner and more, that is affecting the value of Krümmel if you value the OEPV.
I'd say no, absolutely not, because we value Krümmel's OEPVs at 0, because no transaction can be simulated on the valuation date with one buyer who doesn't want to buy. So this is utilized as helping to try to determine when Krümmel might be able to sell volumes, which we've mentioned from the very beginning of this case in my first report, that if and when Krümmel sells volumes, they would act as an offset.
So, and that means if you say you're not able to simulate a willing buyer, the fair market value is 0.
Yes, as I explained in my slides, this is a pretty unique situation, a monopsony, as I think we've agreed. One buyer, the one buyer, why would they buy in 2011 when they could wait till 2019 and buy what they need then? It just would have been irrational to buy, and that's evidenced by Eon's letters in return saying, thanks, but no thanks. We'll come back when we have a need.
First of all, we have not agreed on monopsony. I've just put your monopsony argument to you. So you state that if there's only one hypothetical buyer and that buyer is unwilling to buy, a fair market value is 0. You've just made that argument for the OEPV.
I will add one additional element to that. If they're unwilling to buy for rational reasons, we need to consider both buyer and seller are acting rationally in this hypothetical transaction. If you have an unwilling buyer, simply being unwilling itself does not discount doing the analysis. So that, as you put it, we need to add the additional element of rationality. They rationally refused a transaction.
I completely agree. I mean, so, and now in Corona, the situation where, at least in this country, restaurants are not doing well, and I'm sure that's the case in other countries, if they're closed because of the pandemic, I wouldn't feel comfortable, and I'm sure that you would have difficulties finding a rational buyer buying a restaurant right now, don't you think?
So the market for restaurants, you could still identify a population of potential buyers, and you could still do a valuation of a restaurant even in today's market. Absolutely, you could.
It would be very low, though, wouldn't it?
Well, I don't think it would be terribly low. It depends upon the financial circumstance of the particular restaurant, but I don't think we all expect this pandemic to be going on for 5 years. So a hypothetical model I would have would show possibly 4, 5, 6 more months of slow activity, but maybe picking up and ramping up to the point where the restaurant gets back to a normal operation. And that's kind of the cash flow I would model, and I discount it back and see what we have. But there are definitely many buyers and sellers for restaurants in the market to do a fair market value calculation. So here we have no rational hypothetical buyer to do the calculation in this case.
Because the only buyer, according to you, in real life would be E.ON.
Correct. We've not identified any other potential buyer. I think Dr. Cohen put it well, that you need to look at the sort of relevant buyer pool. And I would generally agree with that concept when you start with a fair market value analysis. And that would restrict ourselves to just the NPPs operating in Germany. And we looked at the table, we looked at the analysis, and E.ON was the only one who would have demand from third parties to buy volumes.
And that is true for all goods that have a limited pool of potential buyers.
What is your that is true?
That if you only have one single real life buyer, as you said, and you can only identify one hypothetical buyer, that's the hypothetical buyer you need to go with for your fair market value, which you did for the OEPV.
Yes. I mean, that's a very good question. So hypothetical does not mean imaginary. In a fair market value analysis, you do look at generally what your relevant buyer pool would be to ascertain generally the size. And in many cases, it's significant. Your restaurant example, that could be hundreds of millions of people would be a potential buyer of a restaurant. In this case, when you look at it, it's one. But the hypothetical basically takes away the personality of the buyer, because what we're looking for is eliminating special characteristics of a buyer. Some buyers are strategic buyers, and they may pay more for an asset. That's not what we're looking for in fair market value. We want what we call a financial buyer. So we take a buyer pool, we say, okay, we know we have one, and then it doesn't matter about any of their characteristics, because now we just consider it the person or company to be hypothetical in nature.
And for the OEPV, that's just E.ON.
And yes, this is a pretty unique circumstance. I don't think I've done another case where there was only one buyer in a potential buyer pool. Usually it's hundreds, thousands, even millions. And so you don't even give it much thought in the analysis. But here, we're in the nuclear industry, we're in Germany, the OEPVs have a very limited number of players that can trade these. And so when you analyze the specific circumstance of this case, it's just one buyer.
So that's the same if you want to sell not just OEPV, but a whole power plant, right?
No, I mentioned that in my presentation for the power plants themselves. It's completely different. Now your potential buyer pool is much bigger. So now you have other operators like Ches, like EDF, the Finnish company Exelon, even RWE could be buying some of these. Even EMBW is a potential buyer for some of these plants. So you have a much bigger buyer pool for nuclear power plants than you do OEPVs.
Well, I beg to differ. And do I recall it correctly that you criticized Ms. Harden for trying to identify a pool of concrete hypothetical buyers for the Krümmel nuclear power plant just with your March valuation date, days after Fukushima?
That I criticized her for trying to find a buyer pool?
You said a hypothetical buyer had to be much wider, and her attempt to identify the pool of hypothetical buyers for a problem-ridden nuclear power plant a few days after Fukushima, you thought she needed to be criticized for it.
Well, I wouldn't use the word criticized. I would say I thought the analysis was mistaken in terms of the right way it should be conducted. So when we say buyer pool, we look at buyers in general. She's taking it a next step and saying, well, who in this market of this buyer pool might be interested? And now you're taking the analysis a little bit more like you're trying to simulate an actual transaction. Like you're trying to answer the question, what could we get if we tried to sell these plants on this day, within 24 hours or 48 hours? She's narrowing the pool based upon characteristics of those potential buyers that she's saying, well, I don't think they're likely buyers. I think it's tough to find of these pool of buyers a buyer that would be willing. And that's a incorrect way to go about the analysis. The correct way is to say you get your buyer pool. Okay, you've got a decently sized buyer pool for the nuclear power plants. And then that's it. Now we have a hypothetical. Doesn't matter that those buyers are unwilling, reluctant.
You've just said if a buyer was reluctant for rational reasons, such reluctance had to be figured in.
If they're reluctant for a rational reason, not to purchase, but in the OEPV case, it was to delay a purchase. So it was to defer the purchase, not necessarily to reject the purchase, but not purchase now. But we never need to, in a group like the MPPs, we don't have to get into an analysis of, well, was EDF really in a position to buy? Strategically, was this within their plans? Did they have the money? Let's go to, EMBW. Oh, it's got some political issues. I don't know if they would really be a buyer. That's not the way the analysis works. It may be what you would do if you were trying to carry out a transaction, which takes months and months, but that's not what you do when you're doing a fair market value analysis.
I think that was very revealing, but let's now bring it back to the model. So again, we were on your first report, model. The model you use to determine when and if Brokdorf will buy OEPVs. That's Navigant Appendices C through N native format Excel. And we've identified that the 88% are pulled from the inception of Brokdorf's runtime through to 2012. Is that correct?
I could see it's M9 through M42. If M9 is the first data point, then yes, that's correct.
Or we can check. So it includes the entire lifetime of Brokdorf. So, and I want you to hold on to that figure 88 mentally, which, most of it is historical data, ex ante available data, including up to 2010, and ex post data 2011 and 2012, which produces 88%.
I'm with you.
Okay, let's do one more calculation, Max, and replace the 42 by 40. So we have the true historical average. That gives us a figure 9. And Mr. Kaczmarek, can you confirm from the formula that we have only excluded the 2 years after your valuation date, which pulled down the average from 89 to 82?
From 88, I think you said 82. From 88.
88 to
it went up.
From 89 to 82, from 89 to 88, by including the 2 years after your valuation date.
That's right. So what you're proving is we used 89% as utilization in our valuation of Brookdorf. When you include the additional years, it drops to 88. That was only utilized to figure out when Brookdorf might have a need to buy additional volumes.
So the inclusion of ex post information lowered the utilization.
It's not ex post information. We had already established that the Krumel volumes have no fair market value, as do the Brunsbüttel volumes. This analysis now is just, okay, we know we're done with valuation dates. There's nothing that's ex post, ex ante. This is just purely figuring out. We didn't even have to frankly do it, but we thought it'd be useful information for the tribunal to know, to say, when do we think they might buy? When do we think they might have a demand in the future?
Priceless. Let's go to the most recent model and look at the same, just to refresh ourselves that there, your averages are on a different basis. They are just on the years 2011, 2012, 2013, 2014. So you've excluded all of the past performance of Brookdorf, didn't you?
So yes, here this was for our second report, and we just haven't updated this or had a need to update since our second report, obviously, because we went to a hearing. Here we switched the average because we saw the utilization dropping. And so we said, okay, the utilization seems to be falling for Brookdorf a bit. How do we think this affects when they might purchase?
And that is your analysis in sheet I2 in the 29 June 2011 valuation with March data, is it?
Yes.
So in your first report, you pulled the historical data, including some 2 years after the valuation date.
Again,
Here, on the first one?
Again, none of it was used. Any of this data after 2010 was not used in our valuation of Brookdorf.
We're looking at the buying of OEPV, which you might
Yeah.
have figured by now.
Yep.
So in your first report, you had historical data available as of the valuation date, plus data not available under the valuation date. The historical data available as of the March and as available of the June 2011 date has been completely removed in your most recent model for modeling the demand of OEPV from Brookdorf for OEPV from Krumel. Is that correct?
We have removed it because you can see that there is clearly a change in the level of output of the plants. Just looking at the numbers, you can see it was above 90, pretty consistently fell to 78.5, 82.7. 2013 wasn't bad, back down below. So we can criticize whether we used only 5 years to estimate when a purchase in the future might occur, but it doesn't affect our valuation of Brookdorf. It just was a way of saying, when do we think that the volumes, some volumes that Krumel has, might be acquired by Brookdorf.
And if the tribunal doesn't agree with your zero value for the OEPVs, the demand of Brockdorff for Krümmel OEPV would be relevant in the valuation of Krümmel. Correct?
Yes, because I think we've always believed that Brookdorf would buy. The owners would never buy on our valuation dates, only in the future. That's why you can't include them in the valuation, the fair market value calculation. But if you were to try to put a value, the problem is, in my view, you just simply can't under the standard we've all agreed to. I don't know any other way to do it. The standard of value is, and like I said, the rules are important. There are many different standards of value, and I wrote this in my first report. I write it in virtually every report. The word value is meaningless unless it's further defined. And I list out all the different standards of value. And when you go through each of them, they all have different results, all of them, depending upon which one you apply. We've all agreed to apply fair market value in this case. It's in this calculation for this answer. It's what the ECT says. I don't see any reason why we wouldn't try to follow the rules for the calculation.
So let's move to Grunde so the tribunal can see that this exercise isn't limited to Brookdorff, but also to Grunde, another buyer of Krümmel OEPV. Grunde is the column O. And if you go down, you see 85. And the formula pulls from lines 41 to 44, representing the years 2011, 2012, 2013, and 2014. Isn't that correct?
Yes.
So let's do a true average and go from the inception to, and a true ex ante average, go from the inception through to 41. And that goes from line 7 to line 41. And we go up to 90. That's excluding the exposed information from the years 2011, 2012, 2013, and 2014. We are at 90. Oh, Max, I think you have purposefully excluded 2014. You need to say 41 instead of 40 up there. Sorry, 41, right. 42, 43, 44. I'm sorry.
Right. Again, all of these calculations, if it's helpful, and I think it will be for the tribunal, just so we can confirm this. If you could go to my first report.
No, Mr. Kaczmarek, your counsel can do that on redirect. I'm conducting the cross, and I'm just asking you to confirm that if I do a historical average for Grunde in column O, going from its inception through to 2010, which is 07 to 040, I get a 91% average instead of the 85 that you are using exclusively based on years post-dating the valuation date.
So if Dr. Conrad, it's your preference to use an extended period of time.
My preference is that you confirm the data, that if I do an average exclusively of information available as of the valuation date, I arrive at an average of 91 instead of 85. Is that correct?
That's correct, but I'm not
Good.
valuing Grunde in this case.
I think you might have realized over the last half hour or so, we're looking at the potential for sales of OEPV from Krümmel to buyers. So
That's what I was trying to helpfully point you to in my first report, where we could confirm how this data is actually being utilized.
So can we go to slide 31 from 35 of the opening, Max? And I go to the figure that you have there at 94.8 terawatt hours. Do you see that figure?
98 or 94.8?
94.8 from table 29 from your first report. Do you see that?
Yes, that's the demand.
And we've just looked at the folder I.2 from your first report and determined that you calculate this demand of 94.8 on the basis of historical data plus the years 2011 and 2012. Correct? Or do you want me to go back?
No, I used all available data up to my report to figure out when people might be buying and selling OEPVs.
So you've included historical data and the years not available as of the valuation date 2011 and 2012.
And maybe we're just getting hung up on the words, but none of this has anything to do with my valuation.
Mrs. Marek, can we stay on my questions, please? So if you were to eliminate the years 2011 and 2012 from your average, if we just have done, the utilization would have gone up significantly, both for Brokdorf and for Grunde. So if you were using not a average including 2011 and 2012, it wouldn't be 94.8, but closer to Ms. Harden's 107.6. Correct?
So if the utilization goes up because you exclude all available data to us, then I would agree there. The implication would be you might forecast purchases in the future would come sooner. But obviously this is a rolling analysis of trying to figure out when the plants would be buying and selling, and now we're already there. There is transactions occurring.
And not at €0, if I might say. Again, you purport to do an ex-ante analysis. If we exclude the years 2011 and 2012, the average utilization of Brokdorf and Grunde would go up, meaning that the figure 94.8 in your report would have to be increased and would be closer to the 107.6 that Ms. Harden has, correct?
That could be. So her analysis of when purchases of OEPVs would occur in the future is outdated if she's limiting herself only to data up to when we're doing valuations. This is not a valuation analysis. This is a forecast of when people will be transacting at in the future. It has nothing to do with the value of the plants.
It's very much to do with the value of the OEPVs.
Well, for her, what she's doing, as I explained, is she's still assuming purchase transactions in the future. So she does use her data to figure out when a transaction will occur in the future. And then she discounts it back. But that's not a transaction on the valuation date. It's what I call a meaningless calculation. She's already knows the transaction's occurring at a future date. So discounting it back does not now make a transaction happen at the valuation date. That's the problem with her valuation of the OEPVs.
And the sale of your nuclear power plant 2 days after Fukushima doesn't happen in 24 hours, as you just said?
Right, because we're not simulating a forced seller analysis, dumping the plant in 48 hours after Fukushima. That's not how fair market value is conducted.
It would take months to negotiate, at least, if not years.
That's correct. It would any transaction takes a significant amount of time, but
Okay, thank you very much. Let's move to the next topic. I think we've exhausted this one. And go to the uncertainty in a different way. Still on utilization. You remember that when we went through the models in the but-for using historical data, if we do not exclude years, we arrived at 67% utilization for Krümmel, right? You remember that?
I think it was 77.
No. If we take the entire lifetime and not exclude the years during which it stood still for reasons completely unrelated to the measures, it's 67.
Maybe that was correct. Maybe we started at 77 and it dropped to 67. I don't perfectly recall, but I'll take your word for it.
Let's go to opening slide 39. So 67. But in your but-for scenario, you use 85%, not for Brokdorf, but for Krümmel. You use 85% for Krümmel. Is that correct?
That's correct. And it's because it was projected by management. Valuations are done based upon forward-looking information. Historical information can help, but you have to analyze the data. You just don't take simple averages, as I think I said. And this was done with a lot of sophistication and thought. And we didn't think there was any reason to doubt that it was a realistic utilization rate for Krümmel to achieve.
And there has been always a diligent management in Krümmel throughout its operation, obviously.
I think that's a comment, not a question, right?
No, it's a question. You just said that you were taking the figures from with a lot of sophistication and thought, so that you thought it was a realistic utilization rate. You just said that a few seconds ago.
Yes, I did.
And same management throughout the lifetime of the plants, ever since Vattenfall took over, right? You're not criticizing the management of the plants by your client.
I don't have personal knowledge as to who was in what positions at all times there. When I said 85%, I'm saying the calculations were done, I think, with a lot of rigor, a lot of sophistication put behind them, that this was a realistic utilization rate to achieve.
Mr. Kaczmarek, can you confirm that you do not criticize the management of the plant by your client in the past?
On what basis would I criticize them?
Do you or do you not criticize the management of the plant by your client? Very easy question.
I generally don't criticize my clients in general.
Did you in the present case?
Did I criticize my client in the present case? I don't recall ever doing so. If I did, I apologize.
So you don't criticize your client for the management of the plant at issue, plants at issue?
No, I have no criticism of management. I haven't made any judgment of management of these plants.
That's not the question. Did you or did you not criticize the management of these plants by your client? If you feel comfortable saying no, just say no.
I did not criticize them. I think I've answered that.
Good. So can we please pull up, Max, can you please pull up Dr. Grauf's fourth report on the screen, Adobe page 161. And that's Dr. Grauf's fourth expert report. And here we are at Adobe page 161. The heading is 11.2, Krümmel Nuclear Power Plant. It says BWR, Boiling Water Reactor, Historical Availability. Do you see that, Mr. Kaczmarek?
I do.
There are a lot of dips there, aren't there?
There's two generally.
I would say three big ones.
Well, again, you can say there's dips, and then you'd want to know, well, why are there dips? And obviously the two big ones are in part, I think, the some of the incidents.
Well, the last dip is actually two fires and two transformer issues. Because as you remember, they tried to bring it back online, and then 2 weeks later, another thing happened. Do you recall that between 2008 and 2011?
I haven't brushed up on the historical aspects of the technical issues the plant faced in answering question 8. I know I addressed it in my first report, but it's not something I've gone back to brush up on.
Max, do you want to pull it up, or shall I ask FTI? You're on mute if you're saying something. Okay, I asked FTI to bring up R0175. That's from exhibit R0175, figure 6, overview of operating cycles and maintenance data for the Krümmel nuclear power plant in the English translation. Yeah, let's go to the full thing, the next one. Yes, the one headed English translation. And can you make the year 94 bigger for Mr. Kaczmarek so he can read it? There's a shutdown period of 247 days. Do you recall what that was?
I know there's been a fire. Again, I didn't go back and brush up on Krümmel's historical history to prepare for this hearing on question 8.
Well, spoiler alert, that wasn't a fire. It just said shutdown extension. Let's go to the year 98. The red one, a maintenance extension from 131 days where the plant didn't run. That wasn't the fire either.
Yeah, I didn't mean to imply the fire occurred in 1994. I believe it was 07. But yeah, I don't recall these. Some of these may be purposely shut down to do improvements to the plant. You know, there are revisions done on these plants from time to time. So shutting them down happens.
You realize that the normal planned maintenance is depicted in yellow, not in red.
Yes. So in some of these, it looks like it got extended, as it says, maintenance extension 131 days. So whether I don't know the technical issue that caused the extension. Perhaps they decided to utilize the fact that it was down to do some improvement. Or perhaps it took longer to do the maintenance that they thought they had to do.
Probably the latter, it took longer. Let's scroll down a bit.
I think that would be speculating, but.
So 27, you have the RESA standstill transformer fire. You see that? In 2017?
2007, as I said, that was my recollection of it.
Yeah, so it was only running 174 days that year.
Yes, that looks to be the case.
And in 28, it ran not at all, standstill due to exchange of transformer dowel problem finding on and valves, findings on valves. Do you see that?
I see that, but I'm not a technical expert, so I'm not entirely certain what all that means.
Next year, 29, it only ran 14 days, as you can see from the right column. And it says there, RESA short circuit transformer standstill due to exchange transformers 181 days.
Yes, it says that.
And in 2010, it says standstill transformer exchange 245 days. And it says standstill preparation for restart 61 days. And it didn't run one single day. You see that?
Correct.
Max, can you show now, and FDI, can you please enable sharing the 2016 opening presentation slides 15?
Sharing's enabled.
Max? It comes. Do you recall that slide from my opening at the time?
You're definitely stretching my memory.
Would it surprise you that the red one is time during which the plant stood still?
No, that wouldn't surprise me. That looks about right. That it was down in 07 and preparing to restart in 2012.
That's a lot of red.
Well, it's red also beyond the moratorium, and that's due to the measures at issue in this case.
No, that's disputed. That's about the restart. So let's go to Mr. Klein's testimony yesterday. Mr. Pika will put up the transcript. And that's page 3109, line 12. Sorry, let's start. Line 16. And in the answer, Mr. Klein said, a fire in a transformer is something very rare. That's something we cannot exclude. That's true, right?
If you give me a chance to read the question you asked.
Why don't we read it out loud, Dr. Pika's question?
Sure.
So since you confirmed that the past operating years and their maintenance costs were the basis, would you say that maintenance costs which could not prevent fires that broke out or valves that cracked as indicative for further projections? And Mr. Klein answered, in the planning, we had a conservative approach. When there were repairs necessary, they would have been covered by the maintenance cost with a high degree of probability. Fire in a transformer is something very rare. That's something we cannot exclude. That is true. Do you see that?
Yes, I see that.
And that's the plant that you project a happy running until the end of time at 85% in your Vattenfall scenario?
Well, in fairness, I think what Dr. Klein was saying here is that you know, obviously you put in all the costs for maintenance necessary to prevent something from happening, but sometimes things happen despite best efforts. So I think he's just saying we couldn't exclude it, but they're certainly planning to spend money to prevent it, as I would expect at all costs.
You also recall the discussion between Dr. Piedeker and Mr. Kleen for the backup data of the maintenance costs from yesterday. Do you?
I saw some of that discussion, yes.
And Mr. Kleen mentioned SAP data. And he says there at page 3117, line 2 and 3, SAP data is available. Did you see that SAP data, Mr. Kaczmarek, when you were working on your reports?
No, I did not do a deep dive evaluation of the projected maintenance or capital expenditures that were projected for the plant.
Did you ask? Sorry, continue.
No, I did not. I presumed that management had used detailed data, had packaged it together, and that's the data I looked at. I don't think I could have critically evaluated that data. I don't have the technical capabilities of the day-to-day operations of a nuclear power plant to be able to do anything with that data.
So you didn't ask for it and it's not in the record, just to confirm.
I certainly didn't ask for it. I don't know if it's in the record. I don't know if you asked for it.
We don't have it. Mr. President, if I could very kindly ask your indulgence for 5 minutes.
Shall we take a break then for 30 minutes?
For me, 5 minutes are fine.
But
we can also do 30 minutes.
We are nearing the 30-minute break, which is in 20 minutes. You need 5 minutes to reorganize your questions so that you can.
Exactly. That would be much appreciated.
I grant you the 5 minutes.
Thank you. FTI, if the tribunal's ready, we are.
Yes, we're just waiting for them to come back. Thank you.
One second, Dr. Conrad, because I see for 19 participants, so they're getting in now.
I'm hearing a background noise. No, thank you.
Okay, that must be me, because I'm sitting in a building that's in the weekend not being heated, nor air conditioning. So this to glorify the glorious life of an arbitrator. So I have some heater somewhere. That's the noise that you hear.
That's karma, Mr. President. You remember that 2016, you were hot and I was freezing and asked for the air conditioning to be lowered so the temperature would go up?
Okay, now the score is even. All right.
This is the first hearing I'm not freezing because I'm at my home.
All right, okay. Good luck for you. All right, Dr. Conrad, you were able to reorganize your questions?
We were, Mr. President.
Okay. Please continue.
So, Mr. Kaczmarek, at transcript 6.17.11 this morning, obviously the number will change with the final transcript, you were asked by the President, and I quote, assuming without admitting that this tribunal would say the NPVs are not to be considered, could that mean that Brokdorf could be left aside in its entirety? And you answered that in the OEPV only scenario, you have a zero impact on Brokdorf because you shut down Brokdorf in 2019. Is that correct?
I don't have the transcript in front of me to confirm the answer, but having read the President's question back, the answer is yes. If the NPVs are set aside or rejected as a breach, their revocation, then Brokdorf can be set aside.
So you have a zero impact because you have exactly the same in the actual and in the but-for.
Exactly.
In your most recent offset implementations, the ones accounting for sales of OEPV, you do not account for any profits that Brokdorf makes from using the OEPV it got in February 2020 from Kümmel, do you?
I do not account for any profit they've gotten or could get.
So you have one side of the purchase in the set-off to Krümmel for the purchase price, but you do not account for any profit Brokdorf is making from producing the very same OEPV, correct?
I did not include that profit on that side of the transaction because volumes were always available for Brokdorf to purchase. This isn't an issue that is a consequence of the measures.
I'm sorry. You have Brokdorf shutting down in 2019 instead of making profits from buying OEPV. That's right.
For my fair market value calculation, that's correct, because any extension, as I've said, to Brokdorf would be a decision for the new buyer who takes over in 2011.
But in this very same transaction, you only account for one part of it and not the other part.
Correct, because I don't believe that that was an issue. The 13th Amendment made uniquely available to Brookdorf, or because, for example, Brunsbüttel volumes were always available. They had 11 terawatt hours, so they could have always bought.
Mr. Kaczmarek, I'm talking about an actual transaction in an actual scenario where you have a set off for one plant from the very same transaction, but you do not do a set off for the other half of the transaction. Am I correct?
I have understood Ms. Harden's indication that she believes there should be a set off. I've tried to explain my reasons why I don't think there would be, but it's not significant.
Not significant. If you have the February 2021, what if Brookdorf runs as it does until 2021, buying more OEPVs? Would you then also not set off, in your own logic, the proceeds that Brookdorf makes from the very same OEPVs it buys?
So again, if you, in my view, if you think Brookdorf has benefited from the measures by suddenly having the availability of volumes to them, which I'm saying that's not the case, and that is my justification for not setting off additional profit. If you were to do that calculation, you know, it's not significant. To give you an example, the transaction we're talking about, I think, was like 139 million euros Brookdorf paid, or E.ON paid on behalf of Brookdorf. So the way we value the OEPVs is what I call a zero NPV analysis, and Ms. Harden has agreed with this. And in simple terms, the way that works is if you pay 50 million euro for something and your cost of capital is, say, 5%, you expect to get back your 50 million plus 5%. And that stream of cash flows is a zero NPV. If you take the actual transaction Brookdorf made, 139 million euros, I think it was, times the cost of capital, which we agree on, 6.5, and then 20% related to claim and share, you get like $1.8 million. So it's not very significant. That's what I'm saying. So even if you were to include it, in my view, it's not a large amount.
Okay, let's go to opening slide 44, please. Max, can you put it up, please? You just said not very significant. Is that right? Mr. Kaczmarek?
The profit that would be put in as a set-off on the Brookdorf side, yeah, not very significant.
I'm pointing you to R0295, Vattenfall Statement of Defense of 15 April 2019, to paragraph 5. Vattenfall, your client, writes, the OEPV have a particularly high value to plaintiff, i.e. E.ON. At the current electricity price, it would be possible to generate some 1.2 billion in profits at a price, and that is in paragraph 67, of 27.83 megawatt per megawatt hour. Do you see that, Mr. Kaczmarek?
I do see that. To put some context into what I think this proceeding is about, there's still a dispute between E.ON and Vattenfall regarding all of these OEPV sales. The E.ON thinks it should be getting them for free and not paying anything.
Could I ask FTI to put up exhibit R0295, both in the German and in the English version, so we can see that the billions is not a typo. Let's go to the next page on both. So Mr. Kaczmarek and counsel for claimant can identify that this is indeed the document that their lawyer, Dr. Karpenstein, who's also present today, sent. You see that up here. And can we now please go to paragraph 5, which is the one I have been reading from? 5, paragraph 5, that would be earlier. And it says, respondents, and that's Vattenfall, can certainly understand why plaintiff, that's E.ON, is displeased about this apportionment. It's economically more attractive to keep all of the revenue oneself. The residual energy production volumes have a particularly high value to plaintiff at the current electricity price of close to €50 per megawatt hour. The 44.12.55, to which claim is laid in this legal action, would allow for more than 2.2 billion worth of electricity being generated. Even after deduction of the production costs of this electricity, it would be possible to generate some 1.2 billion in profits. This is why plaintiff is trying to generate profits which are certain and calculable. So Dr. Karpenstein disagrees with uncertainty here. For itself, by using the residual electricity production volumes for electricity while seeking to refer its co-managing partner to a compensation claim, which would be more than uncertain and impossible to calculate. So that is the 44 that are at issue, where Vattenfall says 50% belong to it and E.ON because both partners should participate. But it does give you an idea how much potential profits E.ON can make from electricity.
It certainly does. Nevertheless, the price was 27.8 euros per megawatt hour, and E.ON is saying this is too high. This is the problem of the monopsony market. They don't want to pay anything. They want to pay zero, and if not zero, I think it's somewhere around €9 per megawatt hour is what they say. So even all of these offset transactions, actual transactions, the price is still uncertain today as to what will transpire. Vattenfall's argument is they think they could make close to €50 per megawatt hour that they could, given that that's, I think the current electricity price is at 50. They think the 27 is more than reasonable, but E.ON or PEL now is saying, no, this is totally unreasonable. We've way overpaid for these volumes.
Remind me, the recent transactions were at €0?
No, the transactions were at 27.8 euro per megawatt hour, but that's still contingent. And that's part of this dispute, I think, that you're showing me, is that E.ON is still saying today, we don't want to pay anything. And if we have to pay something, as I said, they think it should be around €9, that's my recollection, per megawatt hour. So how can we establish a value in 2011 for these volumes when they're transacting today and there's still disputes over the price that they're contingently transacting at today?
Are you aware that it's only contingent on the LG Hamburg either saying 0 or 27.8?
I think there's an alternative argument Pell has put forward, which is if it's not 0, it should be 9. And Vattenfall's position is the 27.8 is a reasonable figure. So that's the context you have to read all of these arguments from Vattenfall. They're trying to defend the price that was contingently agreed to as being reasonable.
And do you recall being told from these proceedings that E.ON complained that Vattenfall would not accept a purchase price of lower than 27.8? Do you recall that?
I don't recall if they've made that particular argument. I believe they've agreed to obviously transfer volumes. So rather than, as we postulated all the way back in our first report, E.ON being a tough negotiator and trying to drive the volumes down. And even here, it seems Vattenfall is providing evidence that they're getting a very good benefit at the price already. The parties agreed to swap the volumes and then fight it out in court over the price. So even today, we have no idea what the OEPVs, what value to set at them, because it hasn't even been decided today. That's how I don't understand how one could value the OEPVs in 2011.
Dr. Conrad, can you hear us?
Now I can. I missed basically all of Mr. Kaczmarek's answer. I'm reading it now from the transcript, and then you can confirm if that's correct or not.
We can't see you at this point. Perfect.
If you could highlight paragraph 6, you can see the first part of paragraph 6.
I'm sorry. It's my cross-examination. I say if you highlight something, and I was out because just to recall, my connection was broken.
Dr. Van, first read the transcript before continuing.
Yes, and I would like to do that.
Okay, please proceed.
And you said, Mr. Kaczmarek, while I was out, that, quote, they're getting a very good benefit at the price already, end of quote. And that was E.ON's benefit. And you've just admitted that you did not record for that benefit in your offset. Is that correct?
I don't know if well, in terms of Brookdorf, no, but I gave you the calculation without the benefit of deferred decommissioning. The profit element on the purchase for Brookdorf is like 1.8 million euro. That's it. The 20% related to claimants.
I'm sorry, can you point me in your offset model to a cell where you account for the benefit from the acquisition of OEPV by Brockdorf? Or is it's not there? Can you confirm it's not there, Mr. Kaczmarek?
That's what I'm saying. I apologize. The calculation I'm giving you right now is not there. I'm saying if one were to account for it at this purchase price of 27.8, the profit element would be for claimant's share, which I have not included, would be 1.8. But what we're talking about here is that 27.8 is being litigated. And Pell's position is it should be paying nothing for those volumes, which there clearly then be well, there'd be more profit on the side of Brookdorf under that, but we don't know. We don't know. Right now, it's the best or the lowest it could be is 1.8. But then I'd have to completely eliminate if it went.
Marek, can you do a hypothetical calculation on your client's time instead of my time? So let's go to the shutdown, which you have imagined. You stand by it that you're still modeling that Burgdorf in an ex-ante scenario is shutting down in 2019.
Right. I'm valuing Burgdorf based upon the assets that it had and the OEPVs that it had.
And you did not include in the record any letter by E.ON saying they shut down in 2019. Dear Vattenfall, we're planning to shut down in 2019. There's nothing of that sort in the record, correct?
There is nothing in the record other than E.ON's projections that they gave us, showing that was all they were planning for at the time because of the uncertainty about OEPV transactions occurring in the future.
That's wrong, actually. And can please FTI put up NAV 122? Mr. Kaczmarek, since your document, show me where you have the alleged decommissioning in starting 1st of January 2020.
I don't recall offhand what this document is. If you could refresh my memory.
It's provisions for decommissioning 2011/2100, so 2100 obviously, in the alt/ATG scenario. That's what the title of this document says.
Okay, and so where are the provisions that you're talking about?
Well, it's your document, and I assume, which I think is wrong, you think that Burgdorf would stop operating because the last year depicted here is 2019.
If this is a document that E.ON gave us and it stops in 2019, then yes, the documents they gave us projected only through 2019.
Can we go to NAV 195? That's also cut at 2019.
Indeed, it seems to be. I don't have the full document in front of me, but if there's no other years beyond 2019 that are shown on this page, it certainly is cut off at 2019.
Except it's not what your clients say. When they were asked to put up in the post-hearing brief to cite the evidence for a shutdown in 2019, they solely referred to transcript day 4, pages 1155 to 1156 to 11. That's our cross from day 4 in the first hearing, and to NAV 230, to NAV 228, and your appendices. So let's go, other than the appendices and the cross, to the letters that your clients say you relied on for the shutdown of Burgdorf in 2019. Let's start with the 22nd May 2015 letter. FTI, if you could pull up NAV 230.
Dr. Conrad, I don't know how many more minutes you estimate your cross-examination will last, but I think we are overdue already for the midday break.
If you could let me finish on the letter issue, because that's quick.
Sure. Okay. If you after this letter, then we take a break now for 25 minutes, because you already took 5 minutes.
Yeah, there are two letters from E.ON, and they were referred to in. Sorry, that's the second one that Mr. Kaczmarek referred to. So that's a letter from E.ON in 22nd May 2015, Mr. Kaczmarek, correct?
Correct. This seems, to my recollection, be the E.ON's response to an additional request by claimants to sell volumes.
And there is the word currently in the second paragraph in the fourth line from the top. Last word. We regret having to inform you that we're currently not interested in acquiring.
Correct. So even in 2015, not interested. They only became interested in buying in 2019 when they had a need.
The fact that Vattenfall asked E.ON for such a letter, were you involved in that?
I don't recall if we were involved in any of this. Certainly, I didn't write any of these letters, but I don't recall.
Were you involved in a similar letter being requested from E.ON in 2012?
I don't recall.
But you refer to it. Sorry, no, you just refer to your report on your direct examination slide 9, where you refer.
That's correct. We did refer to it because those letters were given to us, and it substantiated our view that E.ON had no rational reason to buy at that date, but would only buy at a later date.
So for something like that, you get letters from E.ON. Did you ask for a letter from E.ON stipulating that Brokdorf would shut down in 2019?
Again, what we relied on in our reports was projections that E.ON provided to us. And those projections indicated no operations beyond 2019.
And your client is a shareholder of the Brokdorf power plant?
A shareholder, but not the operator.
And a shareholder has a right to information from the operator, right?
It's a bit unique in the nuclear power industry in Germany. The operator tends to keep far more information available to themselves than what they disclose to their minority shareholding partner.
Let me put it to you that as a matter of German corporate law, Gesellschaftsrecht, for a decision to shut down a plant, that's not something the operator can do without the other shareholders. Did you ask counsel to instruct you on that?
I didn't ask any questions regarding German corporate law towards my clients as to what minority shareholder rights are.
Do you purport that the operator of a nuclear power plant, E.ON, can decide to shut down Brokdorf unilaterally without telling and without involving Vattenfall as the other shareholder?
I don't think I was told one way or the other. The operator has the best information about the plant. You're posing a legal question to me, so I can't answer what involvement the minority shareholder has, if any, in decisions as to whether to shut down or not.
When you saw that respondent disputed your assumption that Brokdorf would shut down in 2019, did you tell your client, if they're really shutting down, can you get me something better in terms of evidence, such as a direct statement from the plant operator that come New Year's Eve 2019, Brokdorf would be history?
What I was interested in was getting forecasts from E.ON for purposes of this case. What your question seems to involve is in a real world corporate relationship between E.ON and Vattenfall regarding the plant. And that was something I didn't want to involve myself with.
Last question on this. A diligent plant operator starts planning the decommissioning application before it actually shuts down the plant. Isn't that right?
It does start planning before it shuts down. And obviously it has an idea as to when it's going to shut down well in advance.
And that happened in reality with Burgdorf because they made the decommissioning application years before the real shutdown at 31st December 2021.
I'm not familiar with the application you're talking about, so I don't know.
We had it in the opening.
You could refer me to your slide if you like, but I have not seen this application.
Let's go back to NAV 195, where I tried to get you to explain to me, since it's your exhibit, what you used it for. And this time, please, could you let Dr. Pika share, TJ? And Mr. Pika is now referring to cash flow from until. Do you see that?
Yes. See the heading, yes.
And then on the left side, he's scrolling down to operation, post-operational phase. Which starts with cash flows for 2020. You see that?
Right, indicating planning to shut down in 2019 and then post-operational 2020 to 2027. I see that.
This is what you made of it because you misunderstood it. Because those costs, especially if you look at the size, are the costs for the decommissioning application. And I'm happy for you to go into your break with that, Mr. President.
We have a break until 4:05 CET. And Mr. Kasmarek, I remind you again, you are under testimony.
Thank you for the reminder, Mr. President.
You're welcome. All right, Dr. Conrad, I see 65 participants, so you can continue.
Ready to go.
Mr. Casimir, can you please turn on your camera?
Yes, I don't see him. That's what I wanted to say.
I'm here.
So, as I promised when we were looking at the Excel sheets, let's talk about Brunsbüttel. So, Mr. Kaczmarek, you argue that in your in your actual, Burgdorf would shut down at the end of 2019. For Brunsbüttel, you argue that it would have shut down, i.e. would not have restarted in the but-for. So Brunsbüttel remains down both in the actual and the but-for. Is that correct?
Yes, that's correct.
What is your basis for that hypothesis?
So that was a decision that was ongoing throughout 2010 and early 2011, whether to shut down or to restart the plant. And I understand the formal decision hadn't been made yet because the measures came into effect, but informally, that had been, I was informed that had been the decision that had been made.
So an instruction, not an assumption by you?
Yes, an instruction or information provided to me by claimants.
And it's a relevant instruction that if you are a shareholder you might want to know, especially when you're buying shares in E.ON, you might want to know whether Brunsbüttel come 2011 is, or whether they are planning to bring it up again or whether it remains shut down. Wouldn't you say that's relevant information for somebody buying stocks from E.ON?
I would agree with you. I'm sure it's relevant information, but there was trade-offs. So they were looking at two options, and they would choose the better option. If it was more profitable to start it up and use the volumes and produce electricity, they would do so. And if it was less advantageous, then they would sell the volumes.
And for an audited report, the same standards would apply for Vattenfall and for E.ON. I mean, as to the reliability of the information that a company is provided to put in its audited annual report.
So in the audited annual report, you just have financial statements. And then typically what accompanies that is commentary from management where they would communicate information such as what's going on with respect to Brunsbüttel.
But information in the audited reports must be true, right?
Of course, they ought to be.
And if not, then you have a big problem as a company.
You can have a big problem, but for example, at the end of 2010, it was still shut down. So there's nothing in the financials that will reflect whether it's starting or it's not starting.
Let me go one further. If you're the auditor and the information is not correct in the audited annual report, you would have an ethical problem, probably also a legal problem, would you?
You would have problems for sure. I have been in many disputes over financial statements prepared falsely, but in this case, the starting up of Brunsbüttel isn't in any way reflected in the financial statements. They're historical results of the business.
FTI, can you put up LH117, please? And if you can go here, this is the 2010 Vattenfall annual report published on 29 March 2011. And if we can go to Adobe page 36, please. That's 34. Oh, sorry. Oh, no. Yeah, you're right. I'm sorry, please. And if you could highlight the column on the right side, which starts with the words operations in 2010. And the second sentence, so it starts, let's read it. The Brunsbüttel and Krümmel nuclear power plants in Germany have been offline since 2007. Against the background of changes in Germany's nuclear energy laws, Vattenfall and E.ON have expanded their cooperation surrounding the jointly owned Krümmel and Brunsbüttel nuclear power plants. It's sufficient to highlight Krümmel and Brunsbüttel FDI. In order to quickly resume generation at the two plants. Can you also underline that FDI, please? So, in the 2010 audited annual report of Vattenfall of 29 March 2011, both Krümmel and Brunsbüttel are being described as going concerns, and that E.ON and Vattenfall have, I quote, expanded their cooperation surrounding the jointly owned Krümmel and Brunsbüttel nuclear power plants in order to quickly resume generation at the two plants and further optimize the facility's operations. Do you see that, Mr. Kaczmarek?
I definitely see that. This commentary from management is not something an auditor audits. This is just additional information management gives to shareholders. But that reflects what I said to you. This was a very live issue in 2010 and early 2011 as to whether or not Brunsbüttel would restart. And certainly shareholders expect management to make the most optimal decision. If it's more optimal to shut it down and sell volumes, they should do that. If it's more optimal to restart and generate electricity, they should do that.
There's no evidence in the record showing that management decided to shut down or not to restart Brunsbüttel as of 31st December 2010.
At that time, like I said, the decision hadn't been made. It was still a very live decision, even into early 2011, where I think that's when the informal decisions had started to be made that they were going to be shutting down Brunsbüttel.
Is there any evidence in the record about those informal decisions that you refer to?
I don't believe there are, to my knowledge. I don't recall. There may be.
So in essence, all we have is your word.
Well, I'm giving you not my word, but my understanding of the situation. To me, this issue in terms of this case is not that significant, because if it was more economic to restart the plant, they would have, and then if it had been shut down by the measures, the damages would only be higher.
Mr. Kaczmarek, if there is no evidence in the record for an assumption you make, instead there's evidence to the contrary, that calls into question your valuation as a whole.
Well, this issue was addressed in my very first report in 2013. So this has been an issue that's been, involved in this arbitration. It's only now in the answer of question 8 that suddenly is my understanding that the decision of whether to shut Brunsbüttel down or not is suddenly being questioned. It hadn't been questioned before. to my recollection. So I don't know why this question is even germane to question 8 at all.
Mr. Kaczmarek, you recall that we asked about not validated evidence and assumptions also in 2016. We may not have used this example, but others. Do you recall that?
Your SAP information? Is that
No.
what you're referring to?
You've just said that, why didn't I criticize you and show you that in the 2016 hearing? And I was just saying that I had enough to criticize you for in the 2016 hearing. Now I have the time also for Vattenfall's 2010 annual report. But let's move to the next point. Let's pull up your model. And that's for Dr. Pirka. FDI, please enable sharing, called the final IAV model. And let's show you Annex A. Sorry, that's the report.
This is Annex A to the first QA report.
The fifth offset model, the one of last Friday, which Dr. Pirka will pull up in a moment.
Oh.
And to recall that you said earlier that the nuclear fuel tax for Bruckdorf had a 0 impact. Do you recall that?
Yes, the obviously the impairment associated with Bruckdorf related to the NFT has been remedied.
In the OPV only scenario.
Well, in both scenarios.
Let's look at the calculation. You remember this appendix C1 updated with the toggles?
Yes.
That's in column D, rows 2 to 6 for Bruckdorf. So we're looking at D for Bruckdorf, and the toggles are over here. And we will switch them to Germany. Assumed breach of NFT, no. And LTE volume revocation assumed to be a breach, no. If you look at cell D6, Mr. Kaczmarek, you don't see a 0 here, do you?
That's because that toggle for the NFT is no longer valid. Only the yes toggle, I believe, is now valid because of the NFT decision.
Well, it is still operational. I believe there's a different reason why this produces a positive impact on Burgdorf.
Yeah, I believe if you switch it to yes,
Mm-hmm.
there you get the 0.
Yes,
exactly.
And let's switch it to no.
Which is, as I said, no longer valid.
I think what you describe as no longer valid is that you forgot to remove the nuclear fuel tax in one of the appendices that this cell pulls from. Wasn't it the case?
I think what we didn't do is strip out the operation of the toggle, but it doesn't matter. The only toggle that matters is yes. The no is a meaningless value for this case now.
So you've hardwired your model to assume the NFT is a breach.
Yes, as I explained in my slides.
Despite the fact that this tribunal is not competent to rule on the NFT tax as a breach.
Well, that's your legal argument, I understand, but I'm not certainly qualified to opine on that.
Are you aware, are you not, that claimants admitted that the decision of the German Constitutional Court was not knowable according to claimants? Well, Dr. Pieker will now show the slide again from the opening. It's slide 75. And that is paragraph 691 from claimant's reply post-hearing submission. And I quote, Germany suggests that Mr. Kaczmarek should model hypothetical NFT payments and repayments based on a specific chain of events which transpired in 2017 and which was not knowable as of Mr. Kaczmarek's valuation date. So if it was not knowable 2011, you had to model the NFT as part of the factual matrix, both in the actual and in the but-for scenario, correct?
This is a point that continues to surprise me that we can't come to an understanding on. The claimant's case is that the NFT was a breach of the ECT. So it shouldn't be in the but-for scenario, but it obviously should be in the actual because Brookdorf was paying it. I mean, that's what damages experts do, right? We're told what the breaches are, and then we remove the effects of the breach. So that's what we did. Now, what I think this is referring to in your paragraph is, well, we didn't know that back in 2011 when we were doing our valuation, but for the NFT. Now there's been a remedy that's been provided. And so we're reducing the claim because it's been fixed.
You didn't fix it because it does make a difference for Krümmel, because in the actual scenario, because it's standing still, it's not paying NFT as part of the factual matrix, and its OEPVs are only sold in 2019 at SEC. Whereas in your but-for, because it is part of the not knowable factual matrix, if this tribunal decides that because of Article 21 of the ECT, it's not in its jurisdiction, then in the but-for, you need to include nuclear fuel tax for the operation of Krümmel. Is that correct?
That's incorrect. That would be ignoring the Constitutional Court's decision, which said the nuclear fuel tax should be void ex tunc, which means Krümmel should continue to be modeled without nuclear fuel tax in the but-for scenario.
Ex ante, as of putting yourselves in the shoe of the year 2011, and as your clients admitted, a decision to that effect by the Bundesverfassungsgericht was not knowable, not foreseeable, i.e. had to be excluded from a 2011 ex ante model, meaning that the only way you could account for the Bundesverfassungsgericht's decision would have been by a later set-off, except you didn't do that. You removed it from the but-for because basically you're modeling, it's hardwired, as you say, to be a breach.
That's correct. Our model was not set up to contemplate this issue being remedied by the Constitutional Court rather than this tribunal. So when it got remedied by the Constitutional Tribunal, we changed the but-for scenario for Brookdorf because we could easily provide the tribunal with the impact of that for Brookdorf. But the Constitutional Court's decision means we should still be doing a but-for scenario for Krumel without NFT payments.
Because instead of modeling the Constitutional Court decision, which wasn't available in 2011, you are pretending it's a breach, even though that's a legal matter.
We're not pretending that that's the claim in this case. It was a claimed breach from the beginning, so we removed it from the but-for.
So your model doesn't allow the tribunal to say NFT was not a breach.
Well, in my view, and I'm sure counsel may have something to say on it, but from an economic matter, the issue is resolved. And so there was a claim NFT was a breach, so we do the but-for scenario without NFT. Somebody else fixed it, and so we should continue to model everything as though there were no NFT. The only reason we model Brookdorf as though it has NFT in it was for expediency, which I explained in my slides.
So you change your model in the but-for information coming in 6 years after the valuation date that, according to the concession of your clients, wasn't so foreseeable in 2011. Is that correct?
Yes, compensation wasn't foreseeable, I think, from a different judicial court than this one. So it is a remedy that's been provided. The court has ruled that the tax never should have been implemented. It was illegal. And so in 2011, at the valuation date, none of the plants should have been modeled on a fair market value basis with the NFT. It was wrong from the beginning.
In reality, the tax was paid, wasn't it? And it impacted on the price available by the nuclear power plants. It's part of the factual matrix, right? As was the repayment part of the factual matrix.
For the actual scenario, yes, that's true, but not for the but-for scenario. The but-for scenario, we assume it never would have come to pass. That's the hypothetical, that the NFT would have never been passed.
And your model doesn't allow the tribunal to switch to breach assumed no and produce that result where the nuclear fuel tax remained a part of the factual matrix and was compensated ex post facto in 2017. Is that correct?
Like I said, the switch is irrelevant now. There's no quantitative effect on any of the plants that should be modeled for the NFT. And that's how we saw Brookdorf relate. Well, for Krumel in the but-for, again, the claim before this tribunal is it was a breach, so it shouldn't be in the but-for. The Constitutional Tribunal sort of did the tribunal's job. It got to the answer more quickly and said, yeah, this tax is illegal. It should have never been applied. So it's sort of proving our but-for was right from the very beginning.
Can this tribunal step into the footstep of the Bundesverfassungsgericht and invalidate a law? Mr. Kaczmarek, spoiler alert, you're not a legal expert. It cannot, because an international tribunal cannot step into the footsteps of a domestic court. Does that sound familiar?
I don't think that's a question really for me to answer.
Despite your 130 exit cases.
Well, my 130 exit cases, I don't make legal
Dr. Conrad,
arguments.
Dr. Conrad, it is fair to assume the expert is here on damages and not on legal matters. So I would move on to the next subject.
Well, he's still trying to avoid my question whether or not his model allows this tribunal to put the toggle to NFT assumed to breach no, and to have the nuclear fuel tax as part of the factor matrix from 2011 to 2016. Mr. Kaczmarek, last time, otherwise I will ask the president to direct you to answer. There's no switch in this model that I can click, or in any of your other models that have been submitted this year, where this tribunal can say NFT no breach, and it would see the payments of the NFT also in the but-for scenario.
That, as I said, that switch is no longer valid. It should be left to yes. And in Krumel, it doesn't affect it because there's never any payments to begin with, and that's correct. So they shouldn't play around with that switch. It's an irrelevant switch. It should just always be hard-coded to yes.
And you said for criminal it's irrelevant, but in your but-for, if the tax was not a breach and you put yourself in the 2011 shoes, Krümmel would have made payments in the but-for of the nuclear fuel tax. Correct or not?
When you say factual matrix, that reflects the actual scenario. The but-for is always a hypothetical. So what you're suggesting by applying the nuclear fuel tax to Krümmel, to put it this way, is that this tribunal would want to impose the nuclear fuel tax on Krümmel, even though the Constitutional Court has already ruled that it was illegal.
Mr. Kaczmarek, I'm trying for you to rescue your model and give a factual matrix, the facts that were knowable in 2011. And in 2011, in the but-for, if you want to have a toggle saying breach no, you would have to model NFT payments by Krümmel.
You have a contradiction. I'm sorry, counsel. When you say factual matrix, that is you're referring to the actual scenario, the actual facts. Yes, the NFT was in place, and that's what was modeled, but not for Krümmel in the actual, because it was shut down. It wouldn't operate and pay NFT. So
Okay,
factual matrix doesn't apply to the hypothetical but-for scenario. It can't.
Mr. Kaczmarek, March 2011, we're turning the clock back. You do not know that 6 years later, the Bundesverfassungsgericht would do anything because your clients say they couldn't know anything and they are the lawyers. So 2011, in your but-for, you did not model NFT payments because you assume for the NFT to be a breach, correct?
That is correct.
Yes. So if you switch your imaginary toggle to is assumed to be no breach, suddenly we would have to see modeled NFT payments for Krümmel's but-for. Also correct.
You're looking at a defunct toggle that doesn't apply anymore. And so, like I said, it should just be hard-coded to yes, and that's it.
Mr. President, could you kindly direct the expert to answer my question that if he wants to foresee a scenario where the nuclear fuel tax is no breach and only using 2011 data, he would have had to model nuclear fuel tax payments for Krümmel in the but-for.
Mr. Kaczmarek, have you understood the question?
So if the Constitutional Court had not made its ruling, then the toggle would be valid because the question would still be open as to whether it's a breach of the ECT or not. And we would say the toggle could be used. The toggle has been made irrelevant now because of that court's ruling.
Mr. President, that wasn't the question. I'm just asking, because his toggle doesn't work, that he would have had to include nuclear fuel payments in the but-for Krümmel, only using 2011 data.
To try to answer the question, yes, we would have, that would be valid, that toggle would still be there, we'd still support the toggle, absent the Constitutional Court's ruling.
Mr. Kaczmarek, can I actually ask you a question here, Dr. Conrad, if you allow me?
Absolutely.
When was this Excel sheet submitted in the proceedings?
So this Excel sheet, well, this particular one came just, what is it, maybe 11 days ago or so, 10 days ago?
Yeah, it refers to the fifth offset, isn't it? So why is it that you submit here an Excel sheet, which now turns out to have what you describe as a defunct toggle?
Well, a valid question. The toggle has been defunct since the 2017 when we submitted the impact of the NFT. We just haven't been trying to make changes to the model because nothing is really changing. We're not trying to improve it, send different calculations, and make things harder in this case. So the model has been working exactly the same as it's worked since the very beginning of this case. The only thing that's changed is this court's ruling. So we just did.
That's not an answer to my question, with all due respect, because Mike, you submitted here 11 days ago a Excel sheet.
President, 2 days ago. It was on the eve of the opening.
Please let me finish. So you submit here recently an Excel sheet which purports to have a toggle, which now seems to be an inoperative toggle, and which should have actually been warned in it. Why did you put a footnote in it? Or you have this little red arrow thing where you can say, wait a moment, don't use it anymore, or it doesn't work anymore. Why wasn't it done?
Well, perhaps we should have, Mr. President, just completely disabled it. But we have explained that in our Q8 submissions. We've told you that this shouldn't be used anymore, and it should just be set to yes, and don't change it. It's nothing. That was our instruction, and we could have just taken it away completely. I agree, so that nobody could play with it. Perhaps that would be better, so that nobody is doing things with the model that they shouldn't have been. But our instruction was, here's the same model. It's always been the same. Just leave this set to yes, and you don't have to worry about it.
But it is what I see here on the screen is set to no.
Well, she set it to no.
All right. Okay. So you can still set it to no, but then explain me what happens if I set it to yes.
If counsel
could you please again put it? If you set it to yes, what happens?
So exactly. So this is the only valid scenario. Don't change that toggle to no. And you see, just as I showed you in my, well, I said don't change it, but could you please change it back? So
yeah, but you show me a difference of more than $500 million.
But it's just not, it's not relevant anymore because the Constitutional Court has remedied this NFT issue. So
I understand. Okay.
If everyone would like, I'll hard code that to yes and submit the model again so that nobody can play with it, because that is the only valid scenario for the model.
Great, thank you. Dr. Conrad, please continue.
Max, can you pull up claimant's opening presentation, slide 10? you yourself, Mr. Kaczmarek, used the same graphics in slide 16 of your direct presentation, didn't you?
Yes, that's correct.
And the one that's doing best of the 4 electricity companies is CEZ, CES.
Yes,
That's the Czech energy company.
correct.
Does the name Temelín ring a bell?
It does not.
Would it surprise you that Temelín is a very sizable nuclear power plant directly on the German border, right about where Passau is on the other side of the border?
Because I'm unfamiliar with it, wouldn't surprise me or not surprise me.
Do you recall that after the measures, energy companies in Germany and proponents of the nuclear power said, why would you shut down the safe German plants? And safe are certainly not my words. And instead, we're buying nuclear energy from the old Temelín plant in the Czech Republic. Do you recall that?
I don't specifically recall that, but I know that's an issue in general that we've raised that complicates the impact of the measures, is that shutting down 8 plants by itself would raise prices, but there could be imports, and this obviously seems to be a specific one. From France was a possibility too.
So ČEZ and EDF were profiting and were able to put nuclear energy into the German grid.
If that's one of the plants of ČEZ, then it could have benefited from the measures, yes.
So if Germany hadn't had such imports, the differential, the increase in electricity prices by taking 8 nuclear plants off the grid would have been even higher. So the benefit to Vattenfall's lignite, coal, etc. plants would have been even higher than with the imports, because the price increases we see include the imports, for example, from ČEZ.
So certainly, if this is answering your question, I'm sure you'll tell me if I'm not. Yes, this particular plant could have benefited from it, and some of this increase in ČEZ's share price could be somewhat impacted by that. I haven't broken it down, but ČEZ was not one of the original companies that we even looked at to assess how the market performed. We looked at Exelon. It was your experts who suggested that we look at these companies, EDF and ČEZ. So we said, sure, let's look at them then.
If we do not account for imports of nuclear power, which are at lower prices and therefore mitigate the increase, taking 8 relatively cheap nuclear powers from the merit order curve, the hike we would see from the measure would even bigger than we're seeing now. Isn't that correct?
That's correct. If there were imports of baseload energy coming into Germany from the Czech Republic, that would offset, obviously, taking out 8 nuclear plants in Germany. Absolutely.
Not offset, but what you're seeing in increased prices would have been even more increased prices, correct?
I'm sorry. So maybe we can clarify. When you say prices, are you talking about electricity prices or share prices?
Electricity prices.
So if the ČEZ plant had not exported energy to Germany, then if your question is, would electricity prices be higher?
Have increased even more than they did.
That factor alone would cause prices to generally increase, yes.
So without the imports, the electricity prices would have increased even more by taking 8 nuclear power plants in Germany from the grid, correct?
Those factors alone, yes, would tend to increase electricity prices. I agree.
Increase the differential
Differential between what?
with and without 8 plants on the grid.
Yes.
Okay, thank you very much. No further questions.
Thank you. Mr. Reinander, you have a question for redirect?
Yes. Could we have a quick break first? Say 15 minutes.
How many minutes?
15?
15? You need it? Okay. 15 minutes break until 5:05 CET.
Thank you.
Mr. Highlander, please proceed with the redirect.
Thank you. Mr. Kaczmarek, first at 6:52:33, that's the timing on the transcript, you were asked some questions about the real world sales of OEPV. And question was put to you, quote, and in your most recent offset calculations, they're also implemented in your ex-ante valuation. And you answered correct. Then 1 minute later at 6:53:29, you said, quote, so those future sales don't enter into my ex-ante analysis, unquote. Could you explain how we should understand these two statements?
So the sales that are occurring right now don't affect the ex-ante valuations that I've done at all. They're just treated as offsets. I may have misspoken if I understand your question correctly.
Okay. Now, if you could let my FTI, if you could let my colleague, Mr. Rosell, share his screen.
It's ready for sharing. Thank you.
Thank you. Now at 7:08, you said with respect to the reference production volumes, you said that it was in the 90s, between 1990 and 1999, plus 5.5%. You recall that?
Yes, that was my recollection.
Yeah. And you were taken to LH Appendix 12 updated. If we put that on the screen. And let's scroll down to the part that you were taken to. There we go. And counsel for respondent pointed you to that column where it says criminal at the top. See that?
Yes.
And they highlighted in yellow then the RPV figure at the bottom, the 82.55.
Yes.
And then they highlighted 5 figures starting at 76.9 and going down. Do you recall that?
I believe so, yes.
And then they asked you at 7:09:28, quote, so the best off years that you criticize, the top 5 that you think are unreasonable, are at 82.55%, correct, unquote. And you said, I'll take your word for it. Do you recall that?
Yes, because I obviously can't do the average of it if that's the utilization rate at the bottom.
And those 5 figures that counsel for respondent had highlighted, what years are those from?
2002 to 2006.
And what decade is that?
The 2000s.
And then if we can try and see what the average is of those 5 figures, and if you can confirm that I do the calculation correctly. If you can put that on the screen. So let's add those up. 76.9 plus 86 plus 87 plus 83.7 plus 92.2. And then I should divide that by 5, right?
Correct.
Is that right?
Looks like you entered the numbers correct, so 85.16.
Okay, thank you. Yeah, we can stop sharing that. Thank you. Then my next question. Counsel for respondent took you through a number of tabs in your model dealing with utilization. You recall that?
I certainly do.
And could you describe to what extent, if any, you have made changes to those utilization tabs in responding to question 8?
No changes have been made to those tabs.
So they're the same as they used to be with your second report then, I guess.
Yes, exactly.
Then at 8:44 in the transcript, you explained that fair market value is not conducted by simulating a forced seller dumping the plant in 48 hours. You recall that?
I do.
And counsel for respondent said that a sale will take months to negotiate, at least, if not years. You recall that?
Correct.
And you started by saying at 8:44, quote, any transaction takes a significant amount of time, and then you're cut off by respondent. What did you want to explain further there?
So the object of, again, doing a fair market value analysis is not answering the question, what if we put the investment up for sale right now? Because obviously if you put the investment up for sale, it's going to take several months and the transaction will occur many months in the future. When you're doing a valuation, you have a date, and obviously no preparations have been made to do that transaction that is presumed to have occurred on that date. So you have to imagine the scenario in doing a valuation that all of the preparations to do the transaction had started much earlier in time to the valuation date, and that the buyer becomes informed, knows everything about the investment, is prepared to transact. He's willing, he's able to do the transaction. The seller is willing and able to do the transaction. And the only issue to then determine is the price. And that's the essence of simulating the fair market value type of calculation.
Okay, I understand. And then another question. You were taken to exhibit R295. If we can have FTI put that on the screen again. That's a submission from the Hamburg court proceedings, if you recall that.
I do.
If we go to PDF page 4, you were asked questions about, well, you were asked questions about paragraph 4 as well, but you were asked questions about paragraph 5 to begin with. And in particular, you were asked about the 1.2 billion euro in profits that's referenced here. And if we go back to the original document, then at 9:28:25, you wanted to highlight something in paragraph 6. What was it that you wanted to point to?
I wanted to point to the first sentence here, which says plaintiff has based its claim to transfer the residual electricity production volumes without compensation, free of charge. So that's Pell's current position. Although a price of 27.8 euros per megawatt hour has been agreed, they're still litigating this, and they still think they should get the volumes that have been transferred without any payment. Because as I understand it, the payments are in escrow right now, pending the outcome of this dispute. And this is evidence, in my view, of the monopsony that Pell is trying to exercise its power as the only buyer. And Vattenfall selling these volumes is trying to demonstrate, we think 27.8 is more than fair, because you can make a lot of profit off of 27.8.
Okay. And the figure of 1.2 billion in profits that's referenced in paragraph 5, do you know whether or not that figure is based on E.ON paying for the OEPV or getting them for free?
I'm sorry, Kazan, just give me a second to read it. I would presume it's based upon them paying for the price. I presume so.
Okay. That was my last question.
We've one question, recross.
You seek permission for recross?
Yes, for one question. Or what? If he answers straight, it's one question, but I will have to break it up in baby steps. It's about Mr. Rylander's first point on the reference production volumes.
Recross permitted.
Thank you very much, Mr. President. Max, can you bring up the second Navigant report of 1st September 2015 final? And go to page 50, that's paragraph 135. Mr. At the bottom, yes. So roughly in the middle, no, second sentence. Mr. Kaczmarek, you write there, we will discuss in greater detail in section 6.b Ms. Hardin's assumptions regarding the future utilization of NPPs are significantly overstated. Ms. Hardin assumes that future utilization of NPPs will be in line with utilizations that were assumed for each nuclear power plant in setting their reference production volumes as defined in the Atomkonsens agreement negotiated in 2000. This estimated utilization was calculated based on the average of the 5 highest years of production for each NPP between 1990 and 1999 plus 5%. That's correct?
Yes, thank you. That reflects my understanding of how the RPVs worked, yes.
Can we go back to the appendix from Ms. Harding that Mr. Rylander just showed Mr. Kaczmarek? Max, do you want to, or do we let FDI do it? Dr. Pika will do it. Max, could you kindly go to the table that I showed in cross and that Mr. Rylander showed in redirect? And Mr. Kaczmarek, can you read the years starting on the left? Just beginning and end.
2001 to 2015.
So they're not the 1990s?
No, not displayed here on the screen. But that's how our calculation, I know, was originally done, was based upon the utilization rates determined the Atomkonsens. And we commented that she was using utilization rates that were 11 years old.
So the exercise, so both Mr. Rylander and myself were mistaken when we highlighted the years 22, 23, 24, 25, 26, and doing a calculation that resulted in an average of 85, because the calculation should have been made with numbers, which I think may be on the page before. Max, can you flip it over and see if we there have the RPV? Oh, actually, it's cut here. So that the mathematical average of the years there do not correspond to the RPV utilization rate 82.55, correct?
Could you?
Max, can you highlight the RPV utilization rate, 82.5?
Yeah, it's still for Kumo. I remember that. Yes.
Yeah. And so, but the calculation is not made on the 2000s, but the 1990s.
So, oh, that's not a question to me. Sorry, Council.
But you agree with me that it's not what is.
Yeah, to maybe help the confusion, her original calculation was based upon the 1990s highest 5 years plus 5.5% in her first report.
And
this is her second report, and I believe, and she's changed it now.
So the 82.55% are the reference production volumes.
This is a different way of calculating it because she changed that between her first and second reports.
I'm not trying to make it as difficult for you, Mr. Kaczmarek, or for everyone. I'm just trying to say that the line RPV utilization rate, reference production utilization rate, is 82.55, but isn't the result of any calculation of that table.
It may not be. I'd have to do the math. It doesn't look like. Maybe, no, it probably isn't including the whole column, but I don't know. I'd have to.
She's not including anything of that column because the RPVs are calculated on 1990.
Excuse me, is this continuing the cross or is this recross?
This is recross trying to help your expert actually that the 82.55 is not drawn from the table that you made him add up and divide by 5.
All right, but okay.
That was the point.
You see the point, Dr. Conrad, but you should not be testifying. Actually, Mr. Kaczmarek should be testifying.
I know, but he seems to be tired. Now, you, Mr. Kaczmarek, have assumed instead of RPV 85 in the but-for Krümmel going forward, didn't you?
Yes.
And 85 is still higher than 82.55.
I can agree with that.
Excellent. No further questions. Thank you.
All right, Mr. Reinander, redirect?
No.
Okay, thank you. Tribunal may have a few questions. Mr. Brouwer, any questions? No?
None here.
Professor Law, any questions?
I've got 3. I think I had 4. 1 was answered. If I can go back to basics, you said right at the beginning of your evidence that what you were measuring was the impairment of the fair market value of the claimant's investments. And you spoke several times about the difficulty of disentangling the effects of the 13th Amendment from other external factors which may have affected the value of the claimant's investment. And how do you disentangle them?
So if we can bring up slide 20 from my presentation this morning, and that may be just helpful to answer your question from that.
Actually, if I can interject, because it may make it shorter.
Sure.
My understanding is that what you do is to attribute all of the impairment to the respondent, and then check with other companies which have been exposed to other external factors as comparables, and see if they have followed roughly the same trajectory. And if they have, then that would be an indication that the comparison would indicate how much of it is through common external factors and how much of it from the 13th Amendment. Is that the way you do it?
I'd maybe describe it slightly differently.
Please.
So obviously the moratorium, as we said, has had the effect of the expectations of the plants shutting down. So as a direct effect, I think that would be profound, obviously. If you think about willing buyer, willing seller trying to buy a power plant that may be permanently shut down after a 3-month review, very difficult to assess a price because it could be allowed to start, it could be shut down. So it has a very profound direct effect, and that is, of course, we removed that. It's this indirect effect, right? And that's why I tried to bring this back up. We knew electricity prices were rising, and Dr. Conrad, I think, asked some good questions about that. So we knew they were rising. We considered later dates, but we knew, well, you can't complain about the expectations of the measures and then indirectly benefit from them by using higher electricity prices in the valuation. So we said that needs to be disentangled, and I think that's your question. How do you disentangle?
No, it's not, and I understand that bit. It's the first step that you've taken with the moratorium. I think illustrates it better. At the stage when the moratorium is imposed, assume, for the sake of argument, that Germany has done nothing in breach of the ECT. So what we have there is a situation where, as I understand it, you're saying that because the market anticipates that something will happen, there is an impairment of the value of the investment.
Correct.
But ex hypothesi, it's not an impairment that results from any unlawful act by the respondent.
I'm with you, exactly, yes.
So what's the question in my mind, and this may be as much for counsel as for you, how do you isolate, how do we isolate what would be the effects of acts on the part of the respondent that were found to be breaches of the ECT from the effects of acts which are not found to be breaches of the ECT? And the moratorium is a perfectly good example of that.
I can give you a quick quantum answer on that, if you like. An alternative to the calculation we did perform would have been using a date such as when the law, I think, came into effect, which was in August 2011. We could have said, okay, now it's clear. And this is the breach, let's ignore the moratorium. So of course we would have said, if the 13th Amendment is a breach, then we have to assume it away, that the plants would be able to resume operations. The LTs would not be revoked and no hard shutdown dates established. And so we would do our valuation at that date, for example. And then I come back to my problem, and it's a problem we've always been trying to solve to do the right thing, which is we know electricity prices in reality in August were higher. So we shouldn't take advantage of that in doing the valuation. Same issue in June. And so we have to lower the electricity prices at that point in time. But we didn't know how to do it. We didn't know what portion was related to the measures, taking 8 plants out, and what portion was related to other factors. So then that moving the date forward from a quantum perspective, I think solves the issue you're talking about. Then we don't have to worry about the moratorium. It's not an issue. It's just you did what you did officially in August 2011. Fine. Let's presume you didn't do that at all. And instead, obviously the moratorium happened, but we would be assuming a scenario where they look at everything and then allow everything to go back the way it was before the moratorium. So that's the way I would look at it from a quantum perspective.
And it's that's troubling me, and I suspect that this is a question for council rather than for you, but you will say this. And it's the basis on which it's assumed that everything would go back to normal, as it were. Why should it not be said that after Fukushima, it was perfectly foreseeable within hours that the regulators of nuclear plants all the way around the world were going to take some sort of action to check upon the safety of their installations, and that it was also foreseeable that, in the words of the submission which claimants put in, that all nuclear power operators, regardless of region, would face additional regulatory scrutiny and possible safety improvement projects. So you may not know what is going to happen, but you do expect that something is going to happen in response to Fukushima and the moratorium. So why assume that production would go on as normal before those factors crept in?
So from my perspective, we are assuming that there would be additional regulatory scrutiny. Absolutely. Completely warranted. But the utilization of the plants doesn't need to be affected by that. For example, for the newer plants, those that began operations after 1980, the regulator let them continue to operate, and they just did a while operating safety review, right? And then they may have come up with for those, okay, you need to do X, Y, and Z types of things, which will be additional costs, right? And we believe, and the technical experts will come next, will tell you that those costs have already been accounted for in the projections, because every nuclear plant has to foresee at some time there's going to be regulatory scrutiny, whether it's driven by the regulator, the industry, an event. They have to plan that this is going to be happening, routinely, that they'll be subject to additional requirements that cost money. And the technical experts will tell you those additional costs are already in our projections.
But there's also the unforeseen costs, of which we've got two examples here. One, which I think you mentioned, was the fire example, which was treated as an unforeseeable or unforeseen exceptional risk, and Fukushima was another, which I think was not anticipated. So are you saying that there was also built into the calculations an allowance for unforeseen eventualities?
That's exactly what I'm saying. And that's a good example. I mean, the fire at Krumel not only would prompt the regulators to do something at Krumel specifically, but probably take action and require all the other operators to do something, right? That's an event. And I think all of the nuclear operators have to anticipate that those types of things will happen. You don't know when, you don't know to what extent they're going to happen, but they're going to happen. And so you better plan your costs to take account of that.
Thanks. So I've got your answer clear on the first question. Second question is related to this. One takeaway from your evidence might be that use of fair market value, particularly having regard to the problems of attributing a value to the OEPVs, is not the best way of assessing the financial consequences caused by the 13th Amendment. And is there another way in which, apart from fair market value, those effects could have been calculated?
Is there another way? I don't think we've really given that a whole lot of consideration from the beginning. You know, we've noted the language in the ECT saying fair market value and
Well, and that only
not to
appears in
impair.
I should have qualified my question.
Sorry.
I'm looking at it in the context of non-expropriation claims.
Yeah.
And the ECT refers to it only in Articles 12 and 13 and not in the general Article 10. So in a non-expropriation context, would there be another way of approaching this question?
So from my perspective, what I'm trying to do is calculate the impact of the measures, regardless of how you label them, right?
Yeah.
Is it unfair and inequitable? Is it arbitrary? Is it an expropriation? That's really for counsel to do. I take a look at the measures and I say, okay, what is the impact of these on these investments? And that's what I do, how I do my calculations. And when we're talking about investments and not commercial cases, when we're investment treaty cases, it's everything is about how the investment is affected. Sometimes profits are affected for a few years. That's typically rare. Most of the cases I see, it relates to this decrease in value, a diminution in value, an impairment in value, because measures tend to be kind of permanent in nature. So I've always been looking at these cases from the perspective of what is the effect on the value of the investment.
An example, I'm not trying to put words into your mouth, but an example of an other approach would be that if a government had promised a certain level of subsidy or something of that sort over a given period of time and suddenly withdrew it, then obviously you could just turn around and say, well, how much did they say they were going to give? It wasn't given, so we will say that what the company has lost is the amount that's missing. And
Precisely.
they need to go through the question of valuing the investment. It would just be straight to the breach. And can you think offhand, or have you thought of any alternative analogous to that, which might have been used?
So that is a question that we look at the beginning of each case is, do the measures have a permanent effect on the investments, or are they temporary? That's kind of the framework I see them. If they're temporary, like you've just described, then you're exactly right. We don't have to deal with the value of the investment. We can calculate the lost payments or cash flows for a distinct period of time that should have been received but weren't received. When the measures have a permanent effect on the investment, then that's always when we turn to looking at how the value has been impacted or impaired.
Yep. Thanks. Third and final question, it's a much smaller one. You were talking about treating the sale of the OEPVs by Vattenfall as an offset. The effect of the offset would be that any damages which were paid to any money which went to Vattenfall would be repaid effectively to the respondent, right? Because it would be deducted from the damages payable by the respondent, if any.
Well, as we keep having sales and assuming those sales go through at those prices, we have been deducting the damages claim for you so that you would award a net amount. I'm not sure it gets to your question.
Well, my question precisely is that that Vattenfall selling the OEPVs actually has no financial interest in maximizing the price for them. because however much it gets, it will lose it all to the respondent. And so the question is, A, am I right in thinking that? And B, if I am, how does that affect the business of attaching a value to the OEPVs once they are sold?
So I do think Vattenfall has a financial interest in maximizing the price. And that is just pure corporate good policy to pursue the best deal it can get for the price. But also I know the 16th Atomic Energy Amendment puts in a requirement that holders of OEPVs must make efforts to sell. And I think one of the concerns Vattenfall may have is they don't know what that means, because they won't get compensated if they're still holding volumes if they haven't made the efforts. So they're making, as I would assume, as good an effort as they can to get the best price that they can for those volumes.
But in principle, E.ON knows that there is no commercial imperative which would drive Vattenfall to hold out for the highest price. And we're not dealing with a normal situation of a buying seller and
That's exactly right. That before the 16th Amendment, Vattenfall couldn't hold out for the best price because those volumes would expire worthless. So they were in a difficult scenario to have to negotiate with only one person who knows, hey, if you don't, E.ON can say, if you don't like my price, that's tough. And then they expire worthless. That's the difficult situation of the monopsony market that exists. So that's why we express some difficulty saying even the future prices, given that dynamic, are hard to understand where they're going to come out. The 16th Atomic Energy Act helps a bit because helps the sellers because now they have a fallback, right? Vattenfall can say to E.ON, hey, if you don't like this price, I'm not going to sell to you. I'll just hold out for compensation from Germany.
Yep.
Right. So it makes it a little bit better for Vattenfall.
Could I intervene just a moment? It occurs to me that a question could arise if it seemed that there was what might be called a fire sale of these OEPVs as to whether Vattenfall had lived up to its obligation to mitigate damages. I think that would be a consideration. That's a comment, not a question.
Thank you.
Well, you have finished your questions, or you have
Yes, that's my comment. I'm finished.
No.
I'm sorry, Vaughn. Yes, excuse me.
No, I'd finished. Thank you.
All right. Okay. Ms. Kasmarek, could you please go to your last report of 22nd January 2020, and you go to page 31, where you deal with Fukushima and the moratorium, paragraph 103. You just said, well, and that's what you see also here written about moratorium. First, let's take first Fukushima. You said, well, look, the effect is basically, I look only what the effect is on the investment and how it can be quantified. And if I read paragraph 105, you see it is basically related to future regulatory changes regarding safety. And in 107, paragraph 107, you give an example of a study in 2017 that there would be a cost of a mere another 47 million. You see that?
Yes.
Would it not be more involved with Fukushima? Fukushima was a nuclear plant disaster, which caused a lot of concern around the world, and also with the population in large, reflecting also that the legislators, the executive, is very concerned about nuclear power. And to see that the measure immediately taken, there's a moratorium in Germany. Would that have not a further reflection and only a reflection on financials like safety measures? For example, in the direction of the value of the investment.
Yeah, and that's what I think the 47 million that Platts was referring to, the medium cost that they measured plants were incurring for exactly that reason, Mr. President, for safety reasons, for whatever upgrades they needed to make. I obviously don't know the details because it's plants around the world. But clearly there was to be costs. That event was going to trigger costs. And that's how we've always viewed Fukushima. It's not an electricity price issue. It's a cost issue. And so we should be thinking about what are the incremental costs to be borne, and does that decrease the value?
Okay, because I see you're criticizing Ms. Harden about the price in paragraph 108 about her law case, both capitalized. And
right.
You approach it from a cost perspective, but are there not larger considerations, like a drama as Fukushima, that it affects the value of the investment?
You'd have to help me out with what you mean by larger effects.
If the willing buyer,
yeah,
on 29 June 2011, would that willing buyer not have in mind, in his or her mind, well, wait a moment, this is Fukushima, the whole public opinion is against us, or against the nuclear power world, the regulatory will be against us, so this is not the most attractive investment. So I actually apply a kind of discount to the value.
So that's not obviously a operational cash flow type of.
I know,
yeah,
but,
right.
But if you mechanically only apply a DCF, in this case, with an overarching situation of Fukushima, are you then not too technical?
So yeah, I mean, I perfectly understand what you're asking. That would be a very subjective issue. Obviously, thinking about a buyer of, it's a reputation, right? I think that's what you're getting at.
No, it's simply assessment of value. I try to imagine that I would be a buyer on 29th of June 2011 and buying a nuclear power plant.
And you would pay.
Yeah, you would
pay less because of the.
In my negotiation,
the stigma of Fukushima.
In the negotiations with the seller, would you not put forward the argument? Hey, wait a moment. Look at what type of background we are negotiating here.
Well, that's a perfectly good question. So if the buyer comes in and says, hey, you've got a nuclear power plant on your hands and you've got this Fukushima stigma over your head, I'll take it off your hands for 40% off. The seller would go, no, thank you. I'll keep the investment and rather than take a haircut of 40%. So you have to figure out, they keep negotiating and have to come to an agreeable price. The seller you can't imagine the seller wants to unload it to somebody who's coming in to take the stigma off their hands at a steep discount, because the alternative is to keep it, right? To keep it. When you keep it as the seller, you're the buyer. You're rebuying it.
Okay, but the process is determining fair market value, and in the fair market value, you have to assume there's a willing buyer. So how willing would the buyer be?
The buyer is absolutely willing, because it is a hypothetical buyer of whom we have no knowledge of, right? We don't know any of the characteristics of this buyer other than they're willing and able and knowledgeable to conduct the transaction. That is all we know. We don't know if they think nuclear power is good because it reduces greenhouse gas emissions and loves nuclear power. We know nothing about the buyer.
Okay.
No personality.
Right, and that's the reason why you leave out the whole consideration of the Fukushima drama, apart from safety incidents which have to be taken into account.
That's a good way of putting it. The drama does not affect our valuation.
Maybe move on then to the next sub-item here, the moratorium. And that's also by Professor Lowe has already been asked a question. I would like to be more specific. In paragraph 112, you, after having quoted the ECT provision on fair market value in the text, in the context of expropriation, excuse me, you state, and you have it in front of you?
Yep.
Okay. Thus, while the moratorium is not claimed as a breach of the ECT by claimants, claimants do claim that the effects of the moratorium of the FMV of the NPPs must be excluded. So,
yes.
And then you say in 113, the first sentence, the exclusion of known information regarding the expropriation of impending expropriation is of significant importance to the FMV calculation. See that?
Yes.
So if the known information would be included, how would you quantify it?
That's tough. You know, I gave the example here of, you know, a government announcing, we're going to expropriate the companies in this industry, you know, and then how do you value a company like that? It becomes less about the actual financials and commercial viability of the business and more about what the political action taken will ultimately be.
No, but
it's almost that I'd probably be thinking rationally no one would buy. No, you couldn't imagine a buyer of any sort rationally committing corporate resources to purchase a company when you know in 3 months' time it may be defunct and gone.
All right. Okay. I have one last question. Also, about follow-up for Professor Lowe. It's about the offsets. And help me simply. The OPV for you, both in the actual and in the but for, have no value.
No. So in the but for, the Brunsbüttel volumes do have value because of the market conditions that I described. Much more buyers, no hard shutdown dates, which is critical, and demand exceeding supply. So you can do a fair market value calculation, but in the actual scenario, you can't do one.
You cannot. So you don't do that because you say it's impossible to attach any value, and therefore you put zero value, right?
That's correct.
And then the offsets. The offsets is actually the actual. That means that there are OPVs sold in the actual scenario, isn't it?
That's correct.
So I mean, what you have is, so you have then in 2011 you say, no, there are no, I cannot calculate, and for some reason then suddenly that appears in 2019, 2018, 19, that you, or 2019 and 20, you can sell these OEPVs. So what is then the thing? Is this because is that after all it would have been possible in 2011 to value them one way or the other?
So so again, under the rules, and as a valuation professional, I have to follow the rules of what fair market value requires. We heard Dr. Conrad talking about falsifying financial statements, right? You have to follow the rules. And the rules would indicate you can't assign them a value in 2011. And I've told you they're not in the financial records of the company either. And they had to consider that once the plants were shut down. So that's just under the framework of the rules. You can't put a value. Doesn't mean you won't get anything for them, though. It doesn't mean you won't get anything. And that's what we've always said. So I'll give you an alternative of the way you can think about this. Forget about fair market value for the OEPVs. Just think of it this way. They couldn't sell them. Factually, they could not sell them. So we called them stranded because they had to sit with them for 9 years, right? 8 or 9 years. And now they can start selling them. This is the first time they can actually liquidate them. There was no reason for Vattenfall to sit on these things. They couldn't use them, right? So if it troubles you, this notion of strictly following fair market value for the OEPVs, which I have to do as a valuation professional, just think of it as the measures left them with volumes they couldn't do anything with for 8 years. Now they're selling them. So let's just deduct the sales they're getting now.
That's my question, actually, because is there a difference between valuing the OPVs in 2011 and put them into the DCF versus what you're doing now, deducting the offsets at the end?
So one, I've never tried to value them in the actual scenario at all, because I said it can't be done. So maybe I may be missing your question.
No, the question is simply a question of how the calculation works. If now what you're doing now is valuing in the DCF the OEPV 0.
For
Correct?
2011,
Correct,
correct, it's 0.
2011.
There's no DCF. There's no DCF
exactly.
though.
And now in what you just submitted in 2020, you say, well, look, I've seen now that OEPVs have been sold, and I deduct them as offset.
Correct.
Total amount. Assume now that you would have done differently. You would have said in 2011, I now accept the value, which I now know, and rather than use it as an offset, you use it as one of the items in the DCF. Would it have given a different financial result at the end?
Oh, I see now what you're saying. So take the actual sales when they occurred and discount them back to 2011?
Yeah, or because you take a pretty extreme position, if I may say so, that there's 0 value. And so you need to find some value, because maybe also I will ask the question differently. When you do your validation or your sanity check with your DCF, would you then look into that your OPFs that you could have sold them? And would you then not go back to the drawing table in 2011 and say, wait a moment, 0 value is maybe too far-fetched. I need to give them some value.
So,
or is that only working with ex-post information?
To me, it's absolutely working with ex-post information. I mean, it may seem extreme at 0, but I'm following the rules. I'm not allowed to break the rules. I'm not allowed to maneuver ways and find creative solutions to things. I got to follow the rules. And that's what I did. 0 is the right number for fair market value at that date. But we've always said, it's likely there's going to be future sales. And when those sales occur, those absolutely should deduct damages. And I think that fits very neatly with the effect of the measures. The effect of the measures, if you want to set fair market value of the OEPVs aside, you can shift that to saying, let's do the offsets like I do, because there was no possibility of even selling them until 2019 and 20. So why not just do an offset instead of even dealing with the question of value, which means by default it's 0 in 2011, but we can set that aside.
Now coming back to my question, then simply a technical question for you as an expert. If you have, instead of doing it as an offset, you'd have taken it as a value in the DCF. Would it have made a difference in the end?
If I had taken it as a value in the DCF and then discounted it back using the known price.
Yeah. Or your estimated price, you can do like your assessment, but this gives you some basis to make a proper estimate.
So I think that's kind of what Ms. Harden's doing. She's saying, oh, here's my estimate of the future sales price for the OEPVs, and she's discounting it back.
Yeah, let me be clear. I'm also of the school that of the as-of concept. So you have, when you make these ex-ante evaluations, don't look at what happens afterwards, unless you have to validate. But here you are in a situation that you value 0, which turns out to have value. So
well,
that might be an exception to the rules you have to adhere to.
So this all comes down to when someone says, and maybe can we go to my first report, please?
What do you mean the first report in this case?
In the very first case.
27 September 2013.
Yeah. And let's go to we are at we're going to go to PDF page 37.
Yeah, okay.
And I know, Mr. President, we're going to go to the bottom, to the quotation. I know you know Shannon Pratt, or of him. And this is something I've been including for 15 years, this quotation. And my sentence above it, the word value has different meanings to different people. Therefore, one must begin by establishing a common understanding of the term value. And this is what Shannon Pratt says, and this is a well-regarded text. Ms. Harden also cites it. Without carefully defining the term value, the conclusions reached in a valuation report have no meaning. No meaning. Is the objective of the valuation to estimate fair market value? Well, that's got one set of rules. Market value, that has a different set of rules and would yield a different price. Fair value, also what I've talked about. Is it investment value? That's specific to an individual buyer. Is it intrinsic value? That's specific to internally to any individual. Fundamental value? Is it the insured value, the book value, the use value? You see, you ask a valuation professional, what's the value of my business? And they're always going to ask you, what standard of value do you want me to use? Because the standard of value will dictate the way you do the analysis and the ultimate amount that comes out. So I know we're all grappling with this. Well, it's got to have some value. Well, I need a framework. I need somebody to tell me what standard of value for me to even do my work. If you just said value, I'm lost. I don't know what to do.
Right up. All right. Mr. Bauer, any further questions?
Yeah, I have a question and a comment. If I understood your testimony earlier today correctly, Mr. Kaczmarek, in your calculation of the fair market value, you have included a factor for, how should I say, improvements, upgrading, safety changes, things that would be demanded by the government, relevant government administrations following Fukushima, for these plants and other ones to undertake, and that's, you've termed that a cost factor. Have I got that right?
That's correct.
Okay. Now, just more broadly, I think I want to say that in this discussion of what would the willing buyer and the willing seller come to, there always has been an enormous, how should I say, public antipathy, widely expressed by the hundreds of thousands after Fukushima gathering in city centers against nuclear power. But of course, a purchaser as of that date in June 2011 would have been aware of the Atomkonsens, would have been aware of the fact that nuclear power was being gotten rid of within the calendar set forth in that, and would also have known that before the 13th Amendment, and I guess this was operated during the shutdown, that the government had appointed two commissions, a safety commission and an ethics commission, and the safety commission, realizing the difference apparently between the situation of nuclear power plants in Germany and Fukushima, which apparently was too close to the sea with too few protections, as I think we've all understood it from the public reports, had found that there was no fundamental safety problem with any of the nuclear power plants in Germany. So there would be a lot of things that would go into how a purchaser would look at it. That's purely a comment I thought pertinent to put on the table, given the discussion that we've been having. Thank you. I'm finished.
Mr.
Thank you.
President.
Sorry, no, wait 1 second. First, Mr. Rielander, you have any questions arising from the tribunal? Follow-up question?
Nope.
Dr. Conrad, any questions arising from the tribunal?
A question of procedure to the President. Can an arbitrator testify on the record?
I take a position here. Dr. Conrad, my question to you was, do you have still follow-up questions?
No.
Okay, thank you. Right, then, Mr. Kaczmarek, thank you for testifying. You're excused as an expert witness.
Thank you very much.
We have still a witness on the menu, if I may call it that way. I'm looking to the screen. We have Mr. Neumann. He is slated for 30 minutes presentation and 40 minutes cross. Will we do it? Will we deal with him today, or you want to do it tomorrow? Mr. Aubert?
Mr. Neumann is ready to make his presentation today, if that would be suitable for the tribunal.
I think we don't have a problem in going slightly longer, but we are in the hands of counsel.
I would love to have Mr. Neumann's presentation today.
Plus also the cross then, Dr. Conrad. It comes as a package deal.
That depends on whether he's going to testify in German or in English, because we would have to cut our cross then, and with the translations experience.
I have asked about the translations. I've asked the improvement. So there was one problem with switches, and apparently that is solved now. So
I need to consult in writing for 30 seconds. Yes, we're ready to go.
Ready to go? All right. Then 1 second. I have to get a statement. Dr. Neumann, please bear with me 1 second. I have to get your expert report for my trolley.
Yes, and before we start, may I remind everyone to switch to the channel they'll be speaking on, and to remember to wait for the interpretation to finish before they start speaking. Thank you.
FTI, can you enable sharing for my colleague, Mr. Robash?
Yes, enabling sharing has been enabled.
Mr. President, this is the court reporter. Can we take 2 minutes for personal comfort?
By all means, David.
Thank you very much.
I see there are more persons.
Thank you very much. I'm back. Okay, I'm back. Are the interpreters online so I can hear and test their microphones?
Yeah,
The interpreter going into.
I'm online.
This is the German booth. Can you hear me? Please give me a
Yes.
thumbs up or a sign. Thank you.
I can hear you on the English channel. Thank you.
Okay. Dr. Neumann, can you hear me?
Ich kann Sie gut hören, ja?
I can hear you well, thank you.
Dr. Neumann, you appear.
Jetzt nicht mehr.
Could you please state
Der Ton ist aus.
Can you hear me?
Ja,
Okay. Could you please state your full name for the record?
but only on the English channel.
I'm sorry, you want to testify in English?
Dr. Neumann he's testifying in German, and I am on the English channel.
Yes. As announced, I present in English, and the cross will be in German.
I see. Okay. All right. So, but are you also on the English channel?
Stand by for 1 second, please. He's all set.
All right. 1 second. Okay. Dr. Neumann, could you please state your full name for the record?
My name is Jens Neumann.
Mr. Neumann, you appear as a witness, as an expert witness for the claimants. I understand that your mother tongue is German, but that you testify in the direct examination in the English language. If any question is unclear, either because of language or for any other reason, please do seek clarification. Because if you don't do so, the tribunal will assume that your answer responds to the question. Now, Dr. Neumann, you will appreciate that testifying before a court and arbitral tribunal is a very serious matter. In that connection, the tribunal expects you to give the following declaration, which is now on the text on the screen.
Excuse me, Mr. President.
Yeah.
As announced, the presentation will be in English.
Yeah.
But the cross should be in German. That was.
But then it is if there's any question about language because of interpretation, please let me know. Because then we will see to clarify. But because if you don't do so, the tribunal assumes that you've understood the question, that you answer a response to the question.
Okay.
Yeah.
Yes.
Are you now being interpreted, or are you on the English channel?
I'm now on the English channel.
Okay, right. Okay, can you then please give me the expert declaration, the text of which is in front of you? You may also do it in the German if you wish.
Yeah. I solemnly declare upon my honor and conscience that my statement will be in accordance with my sincere belief.
Thank you. Then we would like from you an affirmation. Do you affirm that there is no one else in the room with you except those authorized, that no authorized person can communicate with you?
I can confirm that I'm sitting alone here in this room.
Could you please use the camera and show 180, or actually a 360 view of your room?
Just a moment. Best would be. But could you see it? It's.
Yeah, I can see it.
So.
Dr. Pika, that's okay for you? Dr. Pika, you are on mute.
Yes, since that was in 180-degree turn, that was okay.
Okay, good. Thank you. All right. Can you now be shown your witness, your expert report, please? On the screen. All right. Can you go to this is the expert report of 20 January 2020. Can you please go to exactly the signature page? It's page 2. And can you confirm for the record that is your signature?
Mr. President, I can confirm this is a signature of mine.
Thank you, Mr. Neumann. Is there anything you would like to correct, modify, or amend in the expert report?
Now I'm full in compliance with my report.
Thank you. Then I think, Mr. Aubert, you are doing the direct, but actually this is the presentation only, isn't it? Or Mr. Rylander? Or Mr. Anderson is this time?
Yes, it's Mr. Anderson who will do any direct, but I think we'll be presentation.
Exactly. All right. Okay, Mr. Neumann, you have 30 minutes for your presentation. indirect.
Thank you. Mr. President, in October 2016, I already had the opportunity to present in front of the tribunal and answer questions as technical expert for boiling water reactors, especially for the Krümmel nuclear power plant and its safety concept. At that time, I concluded that Krümmel complied with the nuclear rules and regulations in place in 2011, and that the reasonable, foreseeable requirements arising out of Fukushima and expectable requirements for continued operation of nuclear power plants in Germany could have been easily fulfilled. Today, I have the honor to present to you the results of my recent report, which concerns specific questions with respect to the seismic design requirements for Krümmel. It appeared necessary to discuss this topic again and more in detail because there are still statements in the space that Krümmel does not meet and never met the nuclear regulations in this matter, and an extensive backfitting would be necessary to do so. Mr. President, I can clearly state from the start, there is no logical reason and no convincing explanation that would justify an extensive seismic backfitting project for Krümmel. The protection concept against external events of Krümmel is technical in nature and sustainable. My view is based on professional qualification, almost 25 years of experience in nuclear engineering and business, and relevant knowledge in the field of boiling water reactors. At this point, I would like to refer to the more detailed information given in my previous reports, which are still valid. I would simply like to point out that my company now operates under the name Framatome instead of Areva. Mr. President, I will start my presentation with a short look back to the licensing history. Then I will present the latest state of knowledge from the outlook of 2011 in order to summarize my ex-ante view on the post-Fukushima needs. After that, I address the question whether the requirements for seismic design from today's perspective can still be satisfied by the protection concept of Krümmel. And finally, I would like to summarize my conclusions. Next slide. Mr. President, I would like to start my consideration at the point where I was already asked 4 years ago. My initial task was to investigate the status of Krümmel's safety concept and its compliance with the applicable licensing requirements. In my written reports, I addressed all points of criticism which were known or raised by the government or third parties in 2011. The picture shows us a timeline with a chronology of the publications of the top-level nuclear rules above and the operating licenses below the line. The blue-colored items concern the first operating license. The red-colored items concern the second operating license. I demonstrated that Krümmel was constructed and went in operation in 1983 in compliance with the relevant nuclear rules and regulations at that time. These regulations consist of the safety criteria and the RSK guidelines, the same set of rules which were applied for the nuclear power plants which were allowed to be operated after Fukushima, the same set of rules which were still valid in 2011, when Krümmel was taken offline. In the preparation for the last hearing, I was confronted with a new allegation concerning the seismic design, which was raised never before and until now only claimed by Dr. Grauf. As you remember, Dr. Grauf complains that the single failure concept would not be fulfilled with respect to seismic events. I already provided my view on this during the last hearing. However, my recent report considers this topic in greater depth. The second operating license itself, but also the underlying expert provide impressive evidence that the updated single failure concept issued in 1984 and the new introduced incident guidelines from 1983 were appropriately taken into consideration before granting the license. One can easily follow that Krümmel is in compliance with these amendments of the nuclear regulation and these regulations remained unchanged until 2011. Therefore, my statements given in the last hearing remain valid. Mr. President, on this slide, I summarized my ex-ante evaluation with respect to the issue whether a seismic bed fitting would have been indicated or not. I asked myself two questions. First, did the supervisory process and the latest state of knowledge indicate extensive seismic bed fitting measures in 2011? My view is very clear on that, and my answer is no. In this respect, I would like to emphasize 3 points. The periodic safety reviews confirmed at any time the adequacy and reliability of the protection concept of Krümmel against seismic events. At least in 2011, the periodic safety reviews does not reveal one serious finding. I would like to mention that the experts from the TÜV came also to the conclusion that the plant could be operated safely for the next period. Here again, no indication that the protection concept could have become insufficient. Furthermore, in 2011, there were no new scientific elements which would call the design basis of Krümmel into question with respect to seismic events. And as far as I know, there was no simple demand regarding an extension of the protection concept of Krümmel against seismic events. I was not able to find any official document from authorities, experts, or someone else with an indication. The second question. Did Fukushima change anything? Here again, the answer is simple no. When we look closer to the sequence in Fukushima, it is evident that the proper function of the safety system was not significantly impaired due to the direct impact of the earthquake. I think I must emphasize that the tsunami that followed breached the defense. What remains is that Fukushima increased the awareness for beyond design basis scenarios. However, these scenarios have to be considered outside of the regulatory requirements in the so-called stress tests. The primary focus of these stress tests is to discover the existing margins for coping with beyond design basis events. In Germany, the RSK developed a set of criteria which became known as robustness levels for this exercise. For example, robustness of level 1 for seismic events is defined as a capability to withstand an earthquake intensity that is one level higher than the intensity of the design basis. Vattenfall
Excuse me, Dr. Naumann, this is the court reporter. I'm going to ask you to slow down, please.
Okay, sorry.
Thank you.
Vattenfall initiated in 2011, as all other operators, investigations for their plants, which were performed not least by Framatome. It was clear at an early stage that level 1 for seismic events can easily be met, also by Krümmel because of the existing margins. From my point of view, the provision of conclusive evidence would have required only relatively minor effort, mainly by producing further calculations. At this point, I should like to mention that the IAEA design requirements for a peak ground acceleration of 0.1 G, an issue that arose during the stress tests, is covered by this robustness consideration. This is, of course, since the PGA value of 0.1 G corresponds with the intensity-oriented approach of robustness level 1. However, the evidence already produced by Framatome is very clear at this point. Mr. President, as I explained, from the point of view of 2011, I could not reasonably have been expected that it might be necessary to consider seismic upgrades to a large extent for Krümmel. Now we have the year 2020 and 9 years have passed, and the landscape of the German nuclear regulation has changed a little bit. The picture shows on the left side the set of top-level rules which were applied for Krümmel in the year 1988. when granting the second operation license. On the right side, you can see the safety requirements and the corresponding interpretations, which were published by the BMU and were valid today. These safety requirements continue to write forward the top-level nuclear regulations the first time since the 1980s. The first edition was issued in 2012, 1 year after Fukushima, but the latest version with only minor modifications was published in 2015. It enables us to take an ex-post perspective. With respect to the consequences which follows from the publication of the new safety requirements, allow me to quote from the foreword. It says explicitly that, I quote, "The safety requirements shall be applied for safety-related assessments. However, their publication gives no reason for a special safety review. What has been determined in the respective licenses continues to be valid as far as this is not called into question by recent findings and hence has to be reassessed." End of quote. The operating license of Krümmel would obviously not have been questioned by the new rules. However, the question is quite justified whether the consideration of earthquakes has changed, and if so, what can be derived with respect to Krümmel. At the beginning, I would like to say a little bit more about 3 points that I think are relevant for the understanding of the seismic issue. First of all, the defense in depth concept. Second, the assignment of events, in particular of seismic hazards, to a level of defense. And third, the single failure concept. I addressed these points in greater detail in my report. Mr. President, allow me to make a general comment. All these points are by no means new to us. The philosophy behind these fundamental safety principles has remained the same. From my point of view, there are no substantial changes with respect to the spirit of the requirements, even if the wording has partially changed. The arrows in the picture shows us the path of the considered requirements from the older rules to the newer one. For sure, the newly worded requirements leave room for some different interpretations. Let me stress at least the fact that the safety requirements do not explicitly assign external hazards, and earthquakes belong to this group to a certain level of defense. In addition, the safety requirements does not provide numerical values for the probability as an orientation for the user to assign an event to a certain category. In this case, the RSK realized the gap and provided a supplementary statement about the safety philosophy, which is intended to support a consistent interpretation of the technical and organizational requirements specified in the safety requirements for nuclear power plants. However, it must be taken into account that the application of the safety requirements may also require weighted considerations. Mr. President, let me briefly explain to some extent the logic behind the consideration of seismic events in the defense in depth concept by means of the simplified picture presented here. Let me start with the blue bar. It shows a simplified form of the defense in depth concept. As can be derived, defense in depth classifies events into categories, taking into account their frequency. The range of frequencies, or in other words, the probabilities of occurrence per annum, is shown for different categories on the axis below. The term event has to be understood as an occurrence which challenges the safety of the plant or may affect the safety barriers. The concept comprises 4 levels of defense: normal operation, abnormal operation, accidents, and very rare events. Each level defines how the events have to be analyzed and in the safety demonstration and which acceptance criteria are to be satisfied. Normal operation and abnormal operation are combined here in the first box. The anticipated frequencies of operational occurrences are usually higher than 10⁻² per annum. That means once in 100 years. Accidents, or level of defense 3, comprise events with a probability of occurrence less than 10⁻² per annum, but more frequent than 10⁻⁵ per annum. That means up to once in 100,000 years. The reliable control of these events has to be ensured by the safety system. Therefore, the accidents belong to the design basis of the plant. Finally, very rare events, or so-called events beyond the design basis, which are assigned to level of defense 4. Even for this event, there are certain precautions in place to control or mitigate their consequences. A prerequisite for the safety demonstrations, the safety requirements demand the elaboration of a plant-specific list of events considering the defense in-depth approach. This list should comprise all events which are relevant for the specific site and the specific facility. However, the safety requirements already provide examples which serve as basis for this exercise. Some events are pre-assigned or their assignment is self-evident. A large pipe break, for example, is level of defense 3, or an airplane crash is level of defense 4. Others, like natural external hazards, are not assigned. In contrast to other events, the consideration of earthquakes appears more challenging. The reason is that earthquakes have an impact on all components and structures of a nuclear power plant with conceivable consequential damages. Hence, safety-related structures which are necessary to cope with seismic-induced events have to be designed to withstand earthquakes to a certain extent. The German safety requirements determine the design basis earthquake, abbreviated as DBE, as a basis for the calculation proof to be carried out. At the top of the picture, you can see that the design basis earthquake is defined as an earthquake with a probability of occurrence of 10⁻⁵ per annum. That means it covers the strongest earthquake that could reasonably be assumed to occur in 100,000 years. Nevertheless, a minimum intensity 6 has to be taken into consideration. At this point, I would like to give the hint that calculation proof, which goes beyond the DBE, is aimed at investigating the robustness. According to the rules, the DBA must be determined on the basis of site-specific seismic hazard analysis. As all sites are different, one can imagine that the results look also very different. In general, it should be expected that the probability of occurrence decreases with an increasing severity of the earthquake. At the picture, you can see exemplarily a simplified presentation of the seismic characteristics for a site A with relevant seismicity, which stands, for example, for Neckar-Westheim, and below is site B with very low seismicity, which represents very well Krümmel. The severity of the earthquake is expressed by its intensity according to the European macroseismic scale, abbreviated EMS. The higher the intensity of the earthquake, the higher the loads, and of course, the higher the potential damage that should be expected. Sorry. However, the potential damage depends not only on the intensity, but also on the kind of structure which is exposed to the load. Fortunately, the EMS allows us to assess the potential damage related to power plant specific structures. For instance, there are data describing the effects on buildings of reinforced concrete, which do not have a specific seismic design. This is representative, for instance, for the switchgear building. According to the EMS, the corresponding structures do not show any damage up to intensity 5. Only from intensity 6 on, damages can be observed. The legend on the right side of the picture explains the color code I used. Green represents no damage and red represents damages, whereas I did not distinguish the various damage grades. However, one can see very easily that there is a huge difference of the seismic risk when comparing both sites. In fact, the example shows that the seismic risk for the plant at site A is 100 times higher than the risk of the plant at site B. This cannot be ignored in the safety demonstration. Sites with relevant seismicity can be characterized by the fact that not only minor but also serious damages are likely to happen. It is more or less obvious that the probability of an initiating event which is triggered by a seismic damage falls into the range of level of defense 3. On the other hand, there are sites with very low seismicity, where serious and even minor damages are really unlikely to happen. The contribution of seismic risk to the total risk is therefore almost negligible. This is particularly likely to be the case if the site-specific hazard analysis shows that the probability of an earthquake of intensity 6 is lower than 10 to minus 5 per annum. In those circumstances, it must be allowed to assign the seismic event in level of defense 4A. I do not see a contradiction of this approach with the principles of the safety requirements. What else can be derived from the picture? The green color stands for no damage to a structure or building made of reinforced concrete. Translating this to Krümmel would mean that it is very unlikely that, for instance, the switchgear building would be damaged by a seismic event. However, the EMS provides additional empirical evidence for my expectation that a requalification of the switchgear building is easily reachable if needed. Mr. President, let me summarize the principles for the application of the defense in depth concept with respect to seismic events. I would like to start by stating that the safety requirements do not explicitly assign the seismic event to a certain level of defense. Instead of, the requirements demand a site-specific hazard analysis. Following the results of the site-specific hazard analysis, the assignment of the seismic event can be justified either in level of defense 3 or in level of defense 4A, depending on the probability of the seismic event and its potential damage state. The usage of probabilistic considerations in combination with deterministic provisions is not only consistent with the state of the art of science and technology, but also in line with the understanding of the safety philosophy provided by the RSK. It is the prerequisite for the determination and the design of a well-balanced safety concept. The distinction between sites with relevant seismicity and sites with very low seismicity, which is shown in the table, reflects the current practice. If you look at Krümmel now, it can be stated the intensity of the design basis earthquake is determined as intensity 6 and the exceedance probability of an earthquake with an intensity 6 is less than once in 100,000 years. This is a matter of fact and was recently confirmed by site-specific analysis in conjunction with the interim storage. Because of this rarity, it is clearly justified to assign the earthquake to defense level 4A within the site-specific event list of Krümmel. As I have already mentioned, the level of defense determines the preconditions and the acceptance criteria which have to be considered in the safety demonstrations. For sure, level of defense 3 is in general more demanding than level of defense 4A. One of the key postulates is a single failure concept. It requires a certain degree of redundancies from a deterministic point of view to ensure the necessary reliability of the safety function. Mr. President, I must repeat and emphasize, this is a concept which Dr. Grauf complains that it is not fulfilled from the beginning. However, I provided clear evidence that the proper application of the single failure concept, which was published in 1984, was already demonstrated as prerequisite for obtaining the second operational license. And nothing has changed in the legal position until 2011. But what about the new safety requirements? If one compares the main points of the new version of the single failure concept with the old one, word by word, as I did it in my recent report, it becomes clear that the approach of the single failure concept from 1984 is to a large extent comparable to that from 2015, especially with regard to the set of requirements for level of defense 3 and of defense 4A. Accordingly, and provided that the classification in defense level 4A is correct, the new safety requirements cannot challenge the robustness of the protection concept of Krümmel. As one can see in the table, level of defense 4A does not demand a degree of redundancy above 0, except for some certain cases. N+1 has to be applied only for safety functions if the functions are demanded within the first 30 minutes of the event sequence and necessary during 10 hours of self-supporting operation. This condition is in line with the license requirements and is therefore approved for Krümmel. I highlighted the corresponding cell in the table here in green. Mr. President, please allow me to express a second thought. Dr. Grauf takes the view that seismic events cannot be treated in level of defense 4A, but have always to consider in level of defense 3. To me, this is really wrong because he pays no attention on other very important principles of the safety philosophy and well-established verification methods. Let's assume, however, for 1 minute that there are seismic-induced events which have to be treated nevertheless in level of defense 3. What would have been the consequences for Krümmel? The answer is perhaps surprisingly, high likely, none. The single failure concept, of course, demands in principle an N+2 design for safety functions. No question. But an N+1 design is still not impossible. The rules describe clearly the preconditions when a degree of redundancy of N+1 is acceptable. It says inter alia, if maintenance is sufficiently restricted in time and the permissible unavailability is specified in the operational documentation. Mr. President, to my knowledge, this precondition is already fulfilled. Moreover, the necessary reliability of the safety system was proven more than one time in the supervisory process of Krümmel without any doubt. Certainly, one could recommend to reassess the actual facts, but nothing more. Let me summarize the topic briefly. A degree of redundancy of n+1 could be determined in level of defense 4A, but is also acceptable in level of defense 3 in duly substantiated cases. It seems undisputed that the degree of redundancy of n+1 was sufficiently demonstrated for the protection concept against external events in the licensing procedure of Krümmel. My conclusion is therefore that the claim for a third seismic qualified redundancy cannot be substantiated by simply referring to the single failure concept, irrespective of the question how to treat seismic induced events in the defense in depth concept. Mr. President, let me summarize my main statements.
You have 2 minutes left, Mr.
Yeah, of course. Thank you very much.
But don't speed up too much, because poor David, the court reporter, will suffer then too much.
Yeah, it's
Thank
just
you.
reading.
This is a tough one.
Okay, I know.
It is just reading the conclusion. The Krümmel nuclear power plant.
But before, Dr. Neumann, before you go, David, do you have the this presentation itself?
I have the presentation, but my question is whether the witness is reading from a prepared script, because that will help clarify many of the things that I am not getting.
Dr. Neumann, do you have the script?
Yes.
Would you only make it available only for the court reporter? Because that will make the transcript much better. Not now, but when your testimony is over.
I have no objections. It's okay.
Okay, thank you.
So let me summarize the main statements. The Krümmel nuclear power plant is protected against seismic events according to the top-level nuclear regulations during erection, commissioning, and operation. The adequacy and reliability of the protection concept against seismic events were confirmed at any time, not least in the course of the periodic safety reviews. The demand of a seismic backfitting misses any basis from ex-ante perspective. The requirements from today's perspective do not challenge the approved status of Krümmel. An adjustment of the safety concept concerning seismic events is not indicated. Mr. President, I would like to finish with my opening statement. There is no logical reason and no convincing explanation that would justify an extensive seismic backfitting project in Krümmel. Thank you for your attention.
Thank you, Dr. Neumann. I get the message that the interpreters were available only for 1 hour. We have used up now, I think, the time for them for, what is it, 23, 24 minutes. I inquire with the court reporters, with the interpreters, how much more time are you available? I'm on the English channel. I don't get the message.
Until 1:30, Mr. President, I believe.
Sir, I think we said we could be available even past that hour, but
so
just two
1
of our
hour
colleagues,
beyond
so,
what
I'm
was
waiting for them
scheduled
to
originally.
confirm that.
I understand. It's a bit an exceptional situation that we are running over. Because I'm wondering, Dr. Pika, I see you are slated for 40 minutes, and there's a redirect, I think, for Robert for 10 minutes. Maybe question for the tribunal is 50 minutes. Then we are over the time that the interpreters are available. I wonder whether it's not a better way of proceeding that we start with the cross-examination tomorrow morning.
The court reporter, I agree.
All right. Yep. Dr. Pika, is that also fine for your side?
I would only like to reiterate the practical proposal that we would be willing to shorten the cross-examination time if Mr. Neumann would testify in English, as he had done in 2016.
Yeah, but I think it's better to testify, and he is entitled to testify with the help of an interpreter. So I would like to have a clean transcript, and also that everybody can testify in his or her own language and express his or own to the fullest extent possible. So I would say, Dr. Neumann, was very helpful that you made already your opening presentation here, or your direct presentation, and we will continue tomorrow with your cross-examination. Can you hear? Habe ich das verstanden, Dr. Neumann?
Ich war gerade. Could you just repeat the last?
What we do is we will. Mr. Anderson, incidentally, I have asked you. Are you also in agreement with the proposed procedure that we conduct cross-examination tomorrow?
Yes, unless Mr. Picker would say that it's a very short cross-examination, we could deal with it. But otherwise, we'll have to agree to that.
Mr. Picker, you are there for 40 minutes.
Yes, respondent does insist on its right.
40 minutes, okay. Then we definitely go from tomorrow for the cross-examination tomorrow. Dr. Neumann, you understood that we continue tomorrow with the cross-examination at 12 o'clock?
I'm prepared for this. Yes, it's okay.
Great. But you are now under testimony. That means that you are not allowed to discuss with anyone whilst you're under testimony. So we have a relatively quiet evening.
Yes, I was informed before that it could happen.
Okay, great. All right, then I look to the council. Professor Hobert, anything further or on procedural admin matter?
No, nothing from our side.
Okay. Dr. Conrad?
Nothing from us, and we confirm that we do not want anything blanked out from the stream.
All right. Okay. Anything today, Professor Hobert, from your side?
Just a second.
Okay.
I'm reminded that we would like to have the expert reports from the witnesses tomorrow, that are going to make presentations tomorrow.
Right, okay,
They
but
have already been filed, I believe.
Yeah.
So both the direct presentations of both Dr. Grauf and Dr. Grölzinger have been circulated by us yesterday as a matter of precaution.
Okay, thank you.
But Professor Hobert, that was not my question. My question was any objection to any part of the streaming?
No.
No? All right. Then you can also post for exit today.
Okay.
All right. Then we see each other tomorrow at 12 o'clock CET. Have a good evening. Bye, everybody.
Bye-bye. Have a good evening.
Bye-bye.